who cares deeply about principles, about freedom, and about helping others achieve economic empowerment. And while he's known for his insatiable appetite for Bitcoin, his most powerful contribution might just be his brilliant ideas. And it's ideas that endure. Nothing is more powerful than an idea whose time has come. And I can't think of anyone more skilled at spreading the powerful idea of Bitcoin than him. So please join me in welcoming the Executive Chairman of Strategy, Michael Saylor.
I am delighted to get the opportunity today to speak with you about my favorite subject, which is Bitcoin for corporations. Why should your corporation recapitalize on Bitcoin? And leading up to this presentation, I had my team, my talented finance team, working alongside my three devoted AI assistants, do a lot of research in order to explain this topic to you today. So I want to start with the challenge that every company faces. If you've been living in the 21st century, you know that the winners are the digital monopolies. Apple's winning, Meta is winning, Google is winning, Microsoft is winning, Amazon is winning. The more unpleasant part of this observation is that the price that we pay for Amazon to win is 20,000 retailers have to lose. And the price we pay for Apple to win is 20,000 device manufacturers have to lose. And the price that we pay for Google to win is 20,000 journalist organizations, media, newspapers have to lose. And you can see from this chart, the Magnificent Seven are certainly winning. The 500 greatest companies in the world, that is, out of the 400 million companies on the planet, the 500 greatest companies in the world are getting smoked by the Magnificent Seven. They're struggling. And I spent many years in the public market. If a public company can't grow organically 15% a year or more, institutional investors lose interest. The liquidity in the stock dries up. The liquidity in the equity disappears, and then the options disappear. And I remember when it used to be everybody's dream, I can't wait to go public. You're going to start a company, and your idea was, if I could just go public, I will have made it. And what I'm saying is going public is just the next step, but what you find is even if you do go public, unless you can keep up with the Magnificent Seven, you're not making it. Another way to look at the world today is in the public markets, most companies in the public market are what I call zombie companies. They don't have much liquidity. They don't have an options market. They can't beat the S&P index. They can't retain earnings. They can't raise capital. They can't take risk. They're trapped in this paradigm where the capital is toxic, volatility is toxic, inflation is toxic. And this is the dilemma that we face. You can actually see it playing out if you look at a list of publicly traded companies over the past 20 years. This is publicly listed companies in the US, and you can see how they've been getting ground down. It's not a chart of success. If I showed you anything in the modern world and the chart went down and to the right, you would say this is failure, or this is a gradual progressive slide to malaise. We're just not creating healthy companies. Now, it's not just public companies. If you take a snapshot of all the companies in the world, there are approximately 400 million companies in the world, small private companies everywhere. There's 400,000 large private companies. There's 40,000 listed companies in the world. 4,000 listed companies on the major exchanges in the US, the NASDAQ, the NYSE, 400 seasoned issuers. And probably many of you don't actually, how many people in the audience know what a seasoned issuer is? I'm interested just for my own awareness. Okay, you're going to learn something new today. A seasoned issuer is a public company that is deemed seasoned enough, mature enough, to be able to file a registration statement with the SEC and sell securities the same day. So another way to say it is 400 companies out of 400 million companies can raise capital in the United States and the world's greatest capital market without friction. It doesn't seem quite egalitarian. 400, one in a million. One in a million. It turns out that 0.06% of the businesses in the US are able to tap the capital markets. So if you're in business and you're struggling, the conventional wisdom is if you were just better and worked harder, you'd be succeeding. But you can see that the traditional capital markets, they're structured to be exclusionary and elitist. Maybe this has gone back thousands of years. You can definitely trace it to the SEC Act of 1933 and 1940, when the intent of the act was to cut off access to the capital markets to businesses deemed to be, quote, too entrepreneurial, unquote. So here's the hard truth about publicly traded equities. If I expand my view from New York Stock Exchange and NASDAQ to, all the over-the-counter publicly traded securities, there's 12,000. Of those 12,000, 15% can beat the S&P index. 15% beat the index over the course of a decade. 12% of them have a stock that's got more than $10 million a day of liquidity. 83% of all the trading volume in the stock market in the United States is 100 stocks. When you watch CNBC and it's like NVIDIA, Apple, Google, Meta, NVIDIA, Apple, my opinion of Apple, my opinion of NVIDIA, my opinion of the 2x NVIDIA ETF, Apple, 2x Apple, NVIDIA, Meta, gold, Bitcoin, Bitcoin, Bitcoin. And if you're waiting for your favorite company to pop up, it's not going to pop up because the television knows that people just want to trade these 100 things. 8% of those companies have an option market. 8%. Okay, here's the painful one. All of the wealth created in the stock market comes from 4% of the public companies. 96% of these companies have performance equivalent to a treasury bill. That's brutal, right? 96% of the companies can't beat a T-bill. Here's a snapshot of stock performance of the S&P. So we pull the 500 companies. These are the greatest 500 companies in the world. Look at them on this distribution chart. What you can see is that the Magnificent Seven, they're up 221% over the past 4 years. S&P is up 67%. 96% of the S&P companies are underperforming the Mag 7. 96%. 68% can't beat the index. Bitcoin is for the rest of us. It's for the 96%. If you're not Apple, if you're not Google, if you're not Microsoft, then you need to come up with a strategy. And as you can see, it's probably not going to be working harder. Here's a distribution of those companies based on market cap. The average S&P company, $35 billion market cap. The Magnificent Seven, $2.4 billion. So they're not quite 100 times bigger. You got 7 companies that are 100 times bigger. You've got all these other quote unquote big successful companies. They're at 1 to 2% of the size of the winners. This is liquidity, and so if you're looking at liquidity as a percentage of market cap, what you can see is that the average is 1%. So 1% of your market cap is liquid every single day. Our company, of course, off the chart, 7%. Here's volatility. Well, business school teaches you volatility is a bad thing. And so everybody's sent out of business school with a mission to strip the volatility from the balance sheet and then spend their entire life stripping the volatility from the P&L. And you could almost say they succeed. I mean, they've done a pretty good job. Look how many have volatility less than the S&P index. You know, by the way, who has more volatility than the S&P index? Every rich person you admire. Every wealthy person in the world has volatility more than the S&P index because they didn't strip the volatility from their balance sheet. Bernard Arnault and Jeff Bezos, and Mark Zuckerberg and Elon Musk, the people that we're supposed to aspire to, have massive volatility. And yet, these great, well-run companies in the world are going out of their way to strip their volatility. The number one way to strip your volatility away, by the way, is give away all your money. Like, if you want to strip the volatility from your family's balance sheet, give all of your family's wealth to charity. If you want to strip the volatility off of a company, then you take all of the capital, all the cash flow of the company, and you either buy back the stock or dividend it out or give it to somebody else. And it works. But again, the idea, it's kind of, you almost can't make this stuff up, right? When you present it that way, it's I have a strategy. If I just give away all my wealth, I don't have to worry about losing it. Think about that. Here's a distribution of open interest. This is the interest in the options market as a percentage of market cap. And what you can see is maybe people want to trade Tesla and NVIDIA. I mean, they read about them, we speculate about them, we gossip about them. There's something to trade there. But, you know, for the most part, the S&P 500 has very small open interest, and companies that are small in the S&P oftentimes don't have any option market. Billion-dollar, multi-billion-dollar companies, there is no option market. And by the way, if your strategy is get rid of all the volatility on the balance sheet, you'll never accidentally make $50 billion like Elon Musk does or like Jeff Bezos does. You'll never accidentally have anything you own trade up. And if your strategy is strip all the volatility from the P&L, we'll just sign our customers to 3-year enterprise agreements and renew them a year in advance and put a CPI or a PPI escalator on it. Once you've done that, the question is, why would I bother to ever trade the stock? I could tune in once a year, make a decision and forget about it. The only volatility you're getting in that case is negative volatility when something goes wrong. And this is how that strategy transforms the performance. Note that by stripping away the volatility from the P&L on the balance sheet, the companies also effectively strip away the performance. And you can see how our company strategy is an outlier here. There's a few sparks. But for the most part, and again, this is the top 500 companies, we're struggling. And another way to say it is most companies, they're struggling to compete and they're dying slowly. 85% of the US listed companies have less than $10 million of options interest. 75% have less than $10 million in daily trading volume. 85% are destined to underperform the S&P 500. So if you're in one of those companies, or you're running a company, or you hope to start a company, the issue is, how do you break free? How do you actually overcome this structural disadvantage? Everybody in the world talks about AI. If you walk down the street and you ask 100 people, do you think AI is a good idea? Most of them would say yes. Every CEO's got an AI plan. Every investor wants to know your AI strategy. And it's sexy, and it's fun, and it's critical, but it's not the solution to the problem. AI is not the solution. Why? Well, first of all, because everybody agrees that you should use it. Everybody agrees. It's a consensus idea. Everybody agrees you should use AI to cut your costs, improve your products, and grow your business. We all agree on it. Well, that just means 400 million businesses are all agreeing to use the same technology to do the same thing at the same time, right? Where's your edge? Here's what's going to happen with AI. The rich are going to get richer. The famous are going to get more famous. The powerful will get more powerful, right? This is going to be a big benefit to Microsoft and to Apple and to Google and to all your famous celebrities, and to Tom Cruise. If you've got a famous brand, if you've got a distribution channel, you're the beneficiary, those with money and power. However, if you're trying to start something up, there'll be 10,000 AI startups, 100,000 AI startups, a few AI unicorns, and when I say unicorn, I mean 1 in 10,000 companies. There'll be a 99.9% failure rate or 99.99% failure rate, but you'll have some pure play AI unicorn startups, and they will disrupt entire industries. They will destroy thousands of companies. They will change the world. You'll have robots making robots. You'll have someone launch some product to provide the work of 187,000 accountants. You'll have interesting things. Many will fail, but something will succeed. But here's the bad news. It's more likely that your company will be the victim of that trend than the beneficiary of that trend. At the end of the day, this is a steamroller. It's coming. But if you're not the unicorn, and if you're not the digital monopoly or the most powerful company in your country or in your industry, then AI is feeding the rich and powerful. It's not feeding you. It's just turning the screws to you. So consensus thinking, it won't elevate the average company. AI, it's not that it's a bad idea. It's a good idea. AI is a necessary condition for success. You won't stay in business a decade from now if you haven't embraced it. There's no doubt. It's a necessary condition. It's just not sufficient. It is necessary, but not sufficient. You have to embrace it, but it's not going to save you. Bitcoin is the solution to the problem. And why? Well, because very few people agree. Because most people don't think it's the solution to the problem. Few agree that you should use Bitcoin to capitalize your business. Now, you don't have to take my word for it. You can literally go out on the street, you can ask 100 wealthy, well-educated people. Go ask any, business school professor. The majority will say, it sounds risky, not a good idea, increases the risk. You go ask the same people, should I use AI in my startup? They're like, absolutely. Okay. The consensus technology is digital intelligence. The paradigm shifting technology is digital capital. Digital capital will save your company because everybody else doesn't understand it, because the mainstream has not yet embraced it. You get to be first. Or in the words of Peter Thiel, and this is probably the most important quote I'm going to put on the screen today, courage is in much shorter supply than genius. I can show you geniuses. There's 8 billion people on the planet. You can find 8,000 people that are the smartest 1 in a million. You can't find 8,000 courageous businesses to do what I've described. You might think that you've got an IQ 200. You know what people with IQ 200 do in this world? They come up with 100 reasons to not buy Bitcoin. They come up with, they can write books, everything that can go wrong. Well, I can hypothetically imagine that this might be a problem 10 years down the road in that circumstance, and so that's why I will not do it. People lacking courage apply their brilliance to apologize for why they're not going to take the risk. And so this is not about being smart. This is actually about having some courage. Success comes from a willingness to acknowledge reality. I was just showing you some reality, right? Is your business going to all of a sudden start growing 20% a year forever and grow past the Magnificent Seven? Well, again, If you haven't acknowledged that reality, then you won't embrace a new idea, right? You're not winning in the status quo. You need a paradigm shift. Embrace the new idea. Then you have to do the work. Doing the work requires a lot of study, a lot of research, a lot of careful planning. And at some point after all that work, take a risk. And if you do take a risk, then you have to execute. But your path out of this is acknowledge reality, embrace the idea, do the work, take a risk, execute. And what's it mean to do the work? Well, you're doing work for 40 years of your life. You're working. That's 80,000 hours of work to make money. The great irony is every single person in the economy spends 80,000 hours working. Trying to get someone to spend 100 hours to figure out how to keep their money, that's actually challenging. But what I say is spend 100 hours learning how to keep the money that you generated over 80,000. Now, if you're the CEO of a company with 10,000 employees, I want you to imagine 10,000 times 80,000 hours working very hard and then losing all the money. Well, practically speaking, that's what's going on in the world today. It's going on thousands of times everywhere in the economy. Spend 100 hours learning to debunk the 100 criticisms people come up with. Well, I'm worried about this. I'm worried about that. What if Satoshi is a CIA dude? What if Dr. Evil gets a quantum computer? What if? Oftentimes when people get past the it's tulip bulbs, they go to the argument, well, it's too good to be true, so the government's going to take it away from you. That's literally the giga-brain objection. You're right. It will solve all my problems, but it's going to solve them so well, it's too good to be true. So somebody more powerful than me that hates me will just take it away from me. So I think I'll just not try. After a bit of work, you conclude that money decomposes into capital and currency. The conventional thinker will tell you money is a medium of exchange, a unit account, a store of value, and they'll stop and they'll act like they just solved the problem. It's like, this is why you don't want to teach people to brainlessly repeat stuff that they learned in school. Well, the truth of the matter is, when you think about it, you realize that high-frequency money versus low-frequency money varies. So if I want to spend the money for the next 4 weeks, I'm going to use the peso in Argentina. It's a super, super high-frequency money. If I want to hold the money for 4 weeks to 4 years, I'll use the dollar. It's the world's reserve currency. Those are mediums of exchange in the world. But if I want to hold the money for a decade to 40 years, I'm going to use an asset like real estate, like gold, like equity. And if I want to hold the money for 10 years to 100 years, I better have a very durable asset, one that's going to last 100 years. So when you put money on that spectrum, you can see that on one side is capital. It's long-term store of value money that I'm going to give to my children's children. And on the other side is currency. It's high-frequency, convenient medium of exchange money. And once you get that, you realize there's a hierarchy of capital assets. I can use a weak currency to store my company's money. I can use a stronger sovereign debt. I can use strong currency. I can use investment grade debt. I can have a 60-40 portfolio. I can invest in the S&P index. I can buy a bunch of commercial real estate. And at top of that hierarchy, just about everyone that studies this concludes Bitcoin is better gold than gold. Bitcoin is better property than physical property. Bitcoin is a better tech equity investment than any company equity. Bitcoin is the apex capital asset. And if you can't derive it from first principles, then you just look at the market indexes. And so here I'm showing you the average performance of companies in each of these indexes. So look on the far right, that's the Russell 2000. If you're a Russell 2000 company and you generate cash flow and you buy your own stock back, you're generating a 5% return, statistically. You would be better off to buy the S&P index than buy your own stock back. right? If you're an S&P company and you buy the S&P index, or if you buy your own stock back, on average, you're generating a 10% return. The companies like the Mag 7, when they buy their own stock back, they're actually outperforming the S&P because they outperform the S&P, so they're capturing a 31% return. But nobody's capturing the 79% return of BTC. So if you're that Russell 2000 company, instead of buying your stock back, buy Bitcoin. Instead of 5%, you get 79%. Right? And instead of dividending out your cash flows, you bought Bitcoin. You know what you're doing when you do that? You're buying a company at 1 times revenue that's growing 79% a year. If I gave you the chance to buy a digital monopoly, a global digital monopoly growing 80% a year for 1 times revenue with the cash, would you do it? The answer is everybody would do it. Everybody would do it. There's not a single company on earth that wouldn't buy a high growth monopoly growing 20, 30, 40, 50, 60, 70, 80% at 1 times revenue. Well, it's right there, right? That's the asset. You might think I cherry picked the numbers. Well, this is the 10-year performance slices for every 10-year period, from 08 to 18, all the way to 2014 to 2025. And you can see Bitcoin is just continually outperforming. The worst 10-year stretch it ever had was 50%. Well, what if you just hire the smartest money manager in the world to actually manage your money for you? Can you outperform it with people with PhDs? Or look at the performance of all the endowments of the Ivy League. All of the money managers running the endowments of Harvard and Yale and Stanford and MIT, they're actually underperforming the S&P by 3%. That is to say, if they all stopped doing anything and you just put your money in the S&P, they would improve performance by 50%, right? All of the gigabrains doing smart performance, for the most part, they just can't beat the simple index. They're destroying value. And what you see is Bitcoin against all these strategies just keeps beating it over long periods of time. There's nothing you can find here that's compelling. So what is Bitcoin? Well, Bitcoin's the best strategy. The best strategy for what? The best strategy to create shareholder value, the best strategy to grow your company, the best strategy to make money for your investors, the best strategy to keep your company in business forever. What's the second best strategy? You could wiggle your nose and cast a spell and hope that you're NVIDIA. There is no second best strategy, all right? You've got one thing that's giving you 56% a year for the past 5 years or so. If you look to the far right, what's the worst strategy? The worst strategy is buy long-dated sovereign debt, like long-dated. By the way, this is not quite the worst. The worst strategy is buy a weak currency or a collapsing currency or international bonds and a collapsing currency. You're going to lose all your money in 3 to 5 years. That's the worst strategy. The worst strategy in the US is buy long-dated treasuries. Who did that? Silicon Valley Bank did that. It bankrupted them. Most banks did that. They would all be insolvent if they weren't given a waiver by the Fed. There's an irony, of course, that the government actually mandates that banks use those treasuries as their capital asset. It turns out that regulations in the capital markets keep a company from capitalizing on securities. That's why Google can't buy the S&P index. That's why companies can't buy portfolios of stock. That's what they knocked out of the system in 1933 with the SEC Act. If you read Rothbard's Conceived in Liberty, there was a lot of maneuvering politically in DC between the Rockefeller interest and the JP Morgan interest. And this was a big win for the Rockefeller interest against the JP Morgan interest. And we had Roosevelt, who was more of a central planner socialist, and it was his way to put the bankers in New York and the capitalists in their place and centralize control of the capital markets. And one simple way to do it is just make it illegal for a company, a public company, to buy stock in another public company. Well, You look at the chart here, and what you can see is that most companies would have been better off to have just bought gold and capitalized on gold. Gold's the 19th century store of value asset. But of course they didn't. They can't capitalize on the S&P 500 or the Magnificent Seven. So what you have is one strategy gets zero yield with short-dated treasuries. The other strategy, you get 55% or 56% with Bitcoin. You know, and I guess if you're a gold bug, you buy gold, but there's no consensus there to do that, and that's never happened. Now, Bitcoin happens to be the best performing uncorrelated asset. You can see the numbers, right? It's not correlated to risk asset. It's got the highest Sharpe ratio. And all of the things I've laid out have created a trend. And the trend is more and more public companies are beginning to buy Bitcoin and put it on their balance sheet. When we bought it in 2020, we were the first company to buy any material amount. Now you've got 70 publicly listed companies. You've got $68.5 billion of Bitcoin. You've got more companies coming every week, every month, everywhere in the world. And that takes me to the MicroStrategy story. What is the MicroStrategy story? Well, in August of 2020, we faced reality. We had tried everything under the sun, buybacks. We had tried spending massive money on marketing, massive money on sales, expanded our sales force, expanded our technology function. We launched, dozens of new businesses. We've wound them down. Every possible strategy you could. None of them worked. And when the lockdowns hit, we realized we were looking at a fast death or a slow death, or we were going to have to take a risk. And so we decided to take a risk. And when we did it, our stock was about $12 a share, and $6 of that was cash. So the enterprise value of the company was $6. When we did this slide, it's $394. So you can see we could have sold the company for an enterprise value of $6 to $8, or we could go ahead and take a risk and embrace a new idea. And we decided to do that. You can see our trading volume is 5 million a day. Our trading volume now is 5.9 billion a day, right? I mean, you could see our open interest was $1 million in the options market. Today, 96 billion. When we took this snapshot. We weren't volatile, we were very predictable, predictably uninteresting. And the sad fact is we were actually making a lot of money. We were generating $75 million a year in cash flow on a $500 million P&L, or a $500 million revenue stream. The company was that zombie company. It's not poorly run, it's well run. It's just you're competing head to head with Microsoft. And Microsoft has a chokehold on every business on earth. I would submit to you, it would be easier for you if you were an American company, it would be easier for you to leave the United States than it would be for you to leave Microsoft. Think about it. Right? I mean, that's how powerful that company is. And so we started with a $250 million commitment. And we persisted, and over time, the capital markets rewarded us with $26 billion of additional equity. In fact, we were able to raise $37.5 billion of capital, starting with a $250 million commitment, right? Clarity, conviction, courage, commitment. Move forward. The world wants you to win. The world, what you will find is your customers will get behind you, your investors will get behind you, the capital markets will get behind you. These Mag 7 stocks, right, that basically dominate everything, most investors, they're overexposed to them, and so they would like to find something else to invest in. And you know what? Do you know what the CFOs of the great companies of the world brag about? They brag about surrendering their capital. They basically brag about how much stock they're going to buy back this year. So what they're saying is, we created the world's greatest company, and we've got all this money, but we don't know what to do with it, and so we're just going to give it back. So you're the investor, and you're getting showered with hundreds of billions of dollars a year of capital from Microsoft and Apple and NVIDIA. You have to put it somewhere. And so what I'm saying, and what our company became, was a place for the capital to flow. And this is where being non-consensus thinker makes a difference. See why every other great company that you love that's well run is doing their best to get rid of their money? The investors have to invest it somewhere. So our business strategy is to collect money, right? We're actually positively polarized to the capital. We're attracting it. These other companies are negatively polarized to capital. They're repelling it. And you can see that manifested in 2024, where a company that had $500 million in revenue in 2020, and we could maybe generate 50 to 70 million in earnings a year, we raised $22.6 billion last year. And you can see this year, we raised 10.1 billion year to date. Who's giving us this money? Investors. Why? Because they want to make money. Why? Because Apple doesn't want their money. Meta doesn't want their money. NVIDIA doesn't want their money. Okay, all of these great companies don't want their money. And then all the other companies can't beat the monopolies. You're not going to want to give them your money. I want to actually invest in this unicorn, this digital monopoly that's hyper growth, that's fast, and I want to put my money there. Well, what I'm saying is you can make your company that digital monopoly if you do a merger with Bitcoin. And that's what our company did. We did a merger with Bitcoin, and the great thing about this merger is you're merging, at 1 times revenue, and you can reverse it. You can buy 100 million, you can buy 10 million, you can buy $1 billion. Next year you can buy another 500 million. You can buy 20 million. If you're a cab driver in Nigeria, you can buy $27 worth. You can merge with Bitcoin as much or as little as you want. It's a reversible transaction. The fees are quite reasonable. And the return? Well, here's how we perform against everybody else. And it's what I say, if you want to 10x your money, you buy Bitcoin. If you want 100x your money, you buy Bitcoin with someone else's money. If you want 1,000x your money, you buy Bitcoin with someone else's money, and then you leverage the Bitcoin. It's not complicated. It's not even risky, in my opinion. It's just novel. And so that's what we did. And this is the result in 4.5 years. And what you can see is the only company that outperformed Bitcoin over this time period is NVIDIA. You have to invent intelligence. All 499 of the other companies, every other company on earth underperforms Bitcoin except for NVIDIA. And if you can copy NVIDIA, have at it. But if you can't copy NVIDIA, you can merge and you can be Bitcoin. And then once you've merged an operating company with Bitcoin, the way you outperform is by being public and issuing equity or credit instruments and taking advantage of the fact that securities are treated better than commodities in the investor markets. We haven't just outperformed over the past 4.5 years. We've outperformed the last year. So this is the last 12 months. You think the strategy is running down. Not quite running down. You can see what happens if you actually capitalize on Bitcoin. The S&P is up 12%. We're up 249%. Our eternal champion bonds up 2%. Right? And by the way, you can be a great company, like Google's a great company. That's no guarantee the stock's going to perform. At the end of the day, the problem with companies is they have attack surfaces. They have a lot of complexity. They get tariffs. They get antitrust actions. They get unionized. Ultimately, every force on earth is trying to drag the company's performance back to the mean. It's trying to actually drag you back, and the more successful you are, the bigger the target you are. That's why it makes so much sense to partner with a decentralized network that doesn't have a CEO. Well, what about the last 12 weeks? Well, we've gone through the tariff tantrum. Guess what doesn't get tariffed? Right? Bitcoin. No tariffs on Bitcoin. Right? Or another way to say it is all these companies are struggling because they do a lot of stuff. And to paraphrase the Tao of Steve, doing stuff is highly overrated. Okay? The more stuff you do, the more exposure you have to fire and flood and war and tariff and supply chain and regulatory action and politics, et cetera, et cetera, et cetera. So if you look at this report card, what's happened? Well, right now we have, over the last 5 years, we have the #1 return out of the S&P 500 universe. We've got the #1 options market in the entire crypto complex. The #1 return, over the Bitcoin standard era, the #1 volatility, the #1 options market is a function of market cap, the #1 Bitcoin position, and you can see, our trading volumes are 6 billion a day. Now why else is this going to work for your company? Because companies can do something that individuals and trust can't do. Institutions can't do this. Families can't do this. Companies can issue securities. Companies can issue credit securities like convertible bonds, like junk bonds, like investment grade bonds, like preferred stock, like equity, like warrants. These securities are in high demand. What you can see from this chart is the one way to turbocharge a bond is back it with Bitcoin. So our convertible bonds have a blended performance of 62%. That outperforms Bitcoin. If you're buying Bitcoin, you're buying the most volatile asset, most volatile commodity in the world. And yet you can beat that volatile commodity with a credit instrument that gives you downside protection. And that's pretty amazing, because if you want to compare that to the S&P index or the NASDAQ, you can see it's 5, 6, 7x. But look at the other bonds in the world, high yield bonds that are issued by companies that don't have any money, that are struggling to scrape cash flows. They underperform by, in this case, 7% versus 62, by 85%. Look at other convertible bonds, right? It's not just issuing a convertible bond. It's like you want to issue a convertible bond with a crypto reactor in the middle. You want an energy source, a volatility source in it, and a performance source, right? And so simple converts are 4% performance instead of 62. And then investment grade bonds, 1%, you see. So we're able to do this because we're a public company. Your company can do this too. And then you look at this risk-return matrix. The other thing an operating company can do is it can create equity, which is volatile, which gets traded, and then people will actually want to buy all the other credit instruments in order to get the upside with less downside. So what you can see here is all these convertible bonds and our preferred stock. It provides you with upside, but less downside than the common equity. So for the risk-averse investors, you're providing them an on-ramp to the crypto economy, right? You can give them 10% of the risk, 20, 30, 40, 50%. You can give them half the volatility. You can give them guaranteed yields. And there's a massive market for that. When you adopt the Bitcoin standard, you're able to create Bitcoin-backed securities, and there's $500 trillion of fiat-backed conventional securities in the market. I just showed you all the equity underperforms. I could show you other slides that would show you all the credit instruments, all the preferred stocks, all the investment grade bond, they underperform, right? The preferred stocks are bought by people and they're just shoved in a portfolio, going nowhere. You're just waiting to die, right? There's nothing that's going to happen there. And the equity is like everybody knows there's a 90% chance my equity won't work out. They don't want to play the game. You have to change the game. So why don't we move on to the Microsoft story? What is the greatest company in the world? Probably Microsoft. If you look at Microsoft over the past year, 2 years, 5 years, 10 years, what do they sell? They basically license business process to every major company on earth. What's their hardware? No hardware dependency. They can swap out, the silicon. They don't have a difficult supply chain. Nobody can turn them off, and their customers are all very creditworthy, and they sell you 3-year enterprise licenses, and when it's time for you to buy their latest Teams or their latest whatever Microsoft product, they just add it to your enterprise agreement, and you agree to take it because you don't have a choice, right? And it's a well-run, super profitable, high-growth company. Whatever bad happens to them, they're just going to raise the prices to their existing customers and pass it through, and everybody will pay it. So that's Microsoft. I had the opportunity to present the case for Bitcoin to Microsoft about 4 months ago, in December. And I made the following points. It was, to put this in perspective, it was a shareholder resolution, and the resolution says, we think that Microsoft should investigate the feasibility of a Bitcoin treasury strategy. Right? That was the resolution. Do a research study on Bitcoin. And so there was a chance to present to the board of directors for 3 minutes, and I put this together. And what I said to them was, look, you don't want to miss the next wave. Digital capital is the next wave. The way you know it's the next wave is because it's growing 62% a year. It's going to grow past you in a bit. It's the most global, interesting asset in the world. Hundreds of millions of people are talking about it. The greatest digital transformation of the 21st century is the transformation of capital. You're supposed to be in the digital transformation business. This is the transformation of capital, right? Global wealth is spread across $900 trillion of assets. Bitcoin is $2 trillion. Most capital is divided between long-term capital, that's the store of value assets you just hold to keep your money, and then other assets held for utility. The building you need to work in, the warehouse, the working farm, the stock you're holding for dividends. When you see the world that way, what you realize is that risk factors are destroying the long-term capital, right? Your capital is being destroyed by taxes, by inflation, by tariffs, by insurance, by torts, culture shocks, regulation, antitrust. Every single 10K has got 30 pages of these disclosures in them. And so that long-term capital, it's transforming into digital capital because there's no fires in cyberspace. There's no hurricanes in cyberspace. There's no tariffs in cyberspace. There's no war in cyberspace. Why don't you just move your money someplace where some politician is not going to take it away from you, or some war isn't going to deprive you of it, or lightning's not going to strike it? Because at the end of the day, Bitcoin succeeds based on a simple premise. A bunch of smart people in the world would like to keep their money. Period. That's the idea. Right? Who's buying it? The smart money. The smart money everywhere in the world is buying a digital network to keep their money. That's the idea. Digital capital is, it's better. A digital building is better than a physical building. Everything you hate about the building, that it's visible and the mayor can rent control it and weather can strike it, everything you hate about it goes away. And instead the building becomes invisible, indestructible, immortal, and teleportable. Everything that makes it better, you add in. Everything you don't like, it goes away. Bitcoin is the immortal asset. It's the asset that lasts 1,000 years. You want to keep your money 10 years? You want to keep your money 3 years? You buy a crappy currency. You want to keep it 10 years? Buy a strong currency. You want to keep it 50 years? Buy some kind of company or equity and worry about it for 50 years, or buy some property. What if you want to keep your money 500 years? How do you do that? You can't do it with any conventional asset. You can do it with Bitcoin. Bitcoin is the longest lived capital asset in the history of the world. How many people want to be rich forever? Right? I mean, why wouldn't you want to be rich forever? Bitcoin represents economic immortality. It represents the quest to make my company live not a decade. The average life expectancy of a company, by the way, is like 10 to 15 years. If your kids died at age 12, right, you don't think that's a health problem? So what if I told you the reason your kids die at age 12 is they drink dirty water? And I said the solution is drink clean water and they'll live to age 90. Would you change? Right? The money is the fluid. You're running on toxic capital and you want to live forever. You need clean money. So what do we see? We see an industry that's growing from 2 trillion to 200 trillion. When Bitcoin is a $200 trillion asset, what is it? Okay, well, it's still going to be smaller than equity and real estate and bonds. It's just going to be noticeable. It's the emerging global monetary asset. It is digital gold. It is 10 times better than gold, maybe 100 times better than gold. And it is the most powerful, secure computer network in the world. It's fitting in the 21st century. If you want to create a digital commodity, you put it on a computer network, you protect it with electricity, you protect it with computer power, and you spread it to everybody everywhere on Earth. That's what Bitcoin is. It is digital capital. Everything digital is better. Digital pictures are better. Digital relationships, digital messages, digital documents, digital videos. Digital is always better, right? You don't believe me? Ask Kodak, right? It's like digital is better, right? Ask Polaroid. Microsoft should be powered by digital capital. And Bitcoin is the highest performing uncorrelated asset, so you're going to hold something on your balance sheet that's not correlated to everything else. So let's look at the charts. Microsoft is up 18% a year for the past 5 years. Bitcoin's up 62%. What's the cost of capital? The cost of capital is the S&P 500. It's 14%. That's what you're judged against. How are bonds doing? They're down 5%. Now, what if I normalize this against the cost of capital? So what you can see is if S&P 500 is the baseline, Microsoft is outperforming the S&P by 4% a year. Bitcoin is outperforming by 48% a year. And bonds are underperforming by 19% a year. So Bitcoin is outperforming, Microsoft is going to do a buyback. Buying Bitcoin would be 10x better than buying your own stock. What happens if you, is there a way to go back here? Can you move the slide back? I guess you got no back button. Okay. In any event, if Microsoft buys bonds, you're destroying 99.7% of your capital over 10 years, right? That's the problem. Bonds are toxic, but buying your own stock destroys 97% of your capital. So you're going to destroy 97% of your capital buying the stock of MSFT versus buying the Bitcoin. And if you want to outperform, you want to reverse the transaction. You put Bitcoin on the balance sheet. What's the secondary impact of capitalizing on bonds? Because that's what Microsoft does. It decapitalizes, it gets rid of all of its cash flow, and it uses bonds for short-term as its primary treasury asset. So the result is you reduce your options open interest by 98%. Compare the open interest in MSTR, the interest in Microsoft, 98% less. You reduce the liquidity in your stock by 99%. What they're doing is they're denurturing the company, right? But you're not realizing it. Who's losing? The people holding the equity are losing because the equity becomes much weaker collateral. If it's not volatile, then it's not as valuable to hold. And if it's not liquid, then it's not as good collateral to hold. And Bitcoin, of course, emerged as the alternative to bonds in 2024. That was the point at which the SEC endorsed the Bitcoin ETFs. That's the point at which you could see FASB fair value accounting was coming. That was kind of year 0. We're now in year 1. There's three, if you define money as a liquid fungible asset, there's three monies that you can use to capitalize a company in this world today. There is treasury bills, sovereign debt that is, but generally short-dated treasury bills. There's gold, and there's Bitcoin. You've got 19th century money in gold. That was the best idea in the 19th century, gold. You've got 20th century money in treasuries and sovereign debt, and Bitcoin represents 21st century money. Liquid, fungible, capital asset, alternative to bonds. And so you have a choice to make at Microsoft. You can cling to the past, which is conventional finance strategies. Use treasury bonds, do stock buybacks, dividend out your cash flow. Or you can embrace the future. You can take innovative financial strategies based on Bitcoin as a digital capital asset. The first choice is a regression. You're divesting yourself of $100 billion a year. You're increasing investor risk and you're slowing your own growth rate. The second choice is a progression. You're investing $100 billion a year in your enterprise. You're decreasing the risk. You're accelerating the growth. If you look over the last 5 years, Microsoft surrendered $200 billion of capital. They literally won it. How many companies on earth ever generated $200 billion in after-tax cash flow? Right? It's got to be one of the 10 greatest achievements ever. They won and they snatched defeat from the jaws of victory. They took the money and what did they do with it? Give it away. What are we really doing? Well, we're dividending it out. That's one way to get away, and we'll buy our stock back. That's another way to give it away. What happens when you do that? You amplify the risk factors in your own prospectus for your own shareholders. You're now facing these are actual risks that Microsoft publishes to the world. These are the risks that the world's greatest company takes. Every investor has to assume these risks if they want to use Microsoft stock as a long-term store of value. What Microsoft did was they made sure they had $200 billion less capital to deal with the risks, and they probably decreased their enterprise value dramatically. So you're actually levering the company on the future risk. How do you escape the vicious cycle? When you get that much risk, you know what you do? You put massive pressure on your employees, then you put massive pressure on your customers, then you force your customers to buy products for 3 years when they only want 1 year. You force them to buy everything when they only want some things. And you lever your competitors. They complain to the regulators and the politicians. You get sued. Everybody gets angry. Then you go and you engage in the political process. It's a very divisive, stressful dynamic. And if you were to sit in the boardroom of Microsoft and say, well, why do you have to force everyone to sign a 3-year contract or whatever, the answer is because we get a lot of risk and we're trying to strip the volatility off of the earnings forecast for 12 months from now. Well, Bitcoin is the asset without that counterparty risk. You want to get away from counterparty risk to competitors, countries, corporations, creditors, currencies, or cultures. You got to find something that's not exposed to any of them, and that's Bitcoin. So, if you could buy a $100 billion company growing 60% a year at 1 times revenue, and if it was more profitable than your own company, would you do it? Of course you would. What if you could do it every year? Forever, right? Bitcoin is the universal, perpetual, profitable merger partner. And I'll tell you, the conventional investment banker will tell you when you've lost hope in your business, you either do an LBO and you take yourself private, or you got to do a transformational acquisition. And they're pitching you on buying something at 5 times revenue or 10 times revenue that's not growing. I'm giving you something which is dirt cheap, 1 times revenue that's growing 30 to 60% a year, right? It doesn't get better than this. The great irony is the least risky corporate acquisition imaginable, and there's perception by the consensus that it's risky. So let's evaluate Microsoft's options, right? There is a Bitcoin 24 model. You can grab it from GitHub, pull it down, plug your own business into it. We plugged in the Microsoft business, we plugged in their cash flows, and then we actually put together a set of scenarios. We said, well, what if you just sweep your cash flows and a little bit of cash and some treasury into it? Or what if you actually eliminated the dividend and you bought Bitcoin instead of paying the dividend? What if you replaced the buyback of your stock with the buyback of Bitcoin? What if you actually took a little thin layer of debt, like 10% of all the Bitcoin you own, you put on debt? And then what's the payoff? And the answer is it adds anywhere from $155 to $584 a share to the company, right? That's the share price creation. By doing what? By taking less risk. I'm asking you to add anywhere from $1 trillion to $5 trillion to the enterprise value of the company and take less risk. And and all you have to do is stop giving away the money, stop surrendering the capital. See, most equities are based upon the future expectation of cash flows. If you look at Microsoft, 95% of the equity value is future expectations. Well, if you start to buy Bitcoin, the equity value is backed by a hard asset, and eventually 41% or more of the value of the company is based on a tangible asset. Rich people aren't rich because of a future expectation of cash flows. They're rich because they own assets, right? I would rather be invested in a rich company than be invested in a company that gives away all their money but promises to work ever harder and raise the prices on their customers ad infinitum. Right? Think about it. It's not a good look. We work harder, we cut our cost, our customers pay more so that we can support the stock. It's a road to serfdom in a way. And so Microsoft would prosper on a Bitcoin standard. You can see here, your ARR, goes from 10% growth rate to nearly 16%. You're increasing the growth of the company. You're decreasing value at risk. You're creating value. You're de-risking the entire equity. All you have to do is embrace a new capital idea. So do the right thing. It's good for your customers, good for your employees, good for your shareholders, good for the country, good for the world, good for your legacy. Adopt Bitcoin. That's my pitch to Microsoft. But what I would say is, I didn't do all this work just for Microsoft. I did this work because everything I just showed you would be applicable to every other company on earth. Doesn't matter how big or small you are. It's the same exact message to 400 million companies. But for those of you who have followed me, there are 21 rules of Bitcoin. And I'm going to note rule number 11. Bitcoin insight is restricted to those with a need to know. You have to need to know this. So when this came up to a vote, 99% of all the shareholders of Microsoft voted against a proposal to invest or to study the feasibility of doing this. 99%. This is what I mean by consensus. And of course, why? The answer is it's the most powerful company on earth. Right? They don't need it. They don't need the money. You need the money. Right? And that's the beauty of this entire thing. Microsoft didn't have a need to know. And so I end this with just one question for you. Does your company have a need to know? And what will be your Bitcoin story? Thank you. Thank you. Should I give this to...
Please take your seats. The program will begin in 5 minutes. welcome to the stage your host, Natalie Brunell.
Good afternoon, everyone, and welcome to Bitcoin for Corporations 2025. I'm so honored to be back for my third year, and we have a very exciting afternoon in store. I have never seen so many orange ties, and I'm absolutely loving it. Let's get right into it since we're running a tiny bit behind schedule. I am pleased to introduce George McHale, the Managing Director of Bitcoin for Corporations. He's going to reveal how industry leaders are driving adoption, what's fueling the momentum, and how your company can gain first mover advantage in this rapidly evolving landscape. George?
Good afternoon. Hey, it's great to be with you here in Orlando. What a good-looking group. First of all, I always like to acknowledge that just to kind of get you on my side. So it's great to be here. My name is George McHale. As Natalie mentioned, I am the Managing Director of Bitcoin for Corporations at BTC Inc. I'm also the co-author of Thank God for Bitcoin. And I recently released a parenting book called I Am Not Your Bruh, 21 Keys to Sound Parenting. So I graduated from the Bitcoin class of 2017, and today I want to share with you how we are accelerating corporate Bitcoin adoption. So last year at Bitcoin 2024 in Nashville, BTC Inc. and Strategy, they were actually still MicroStrategy back then. I don't know if you guys remember, maybe some OGs in the room. They used to be called MicroStrategy, they just changed it. We announced a formal partnership launching Bitcoin for Corporations. The goal was to onboard the next 100 public companies to a Bitcoin standard. The response to our partnership has been very bullish. Since the launch, we've had a chance to meet some brilliant leaders, some very obsessed. I mean, every leader that I've met has a touch of the tism, and let's be honest, I get it. It's like if you're in Bitcoin, you have to be a little bit crazy, a little bit unhinged to be this in deep. But I'm here for it. I mean, these are my people. I love events like this where I get to. It's kind of like a reunion, right? I get to see all these people that I've been talking to over Zoom all around the world. And feels like a reunion of old friends. And so when we first launched, one of our earliest inbound leads reached out. It was right after the announcement in Nashville. I'd never heard of their company, so I was eager to learn more and jump on a call with them. And when we talked, their founders shared that they had been stacking Bitcoin for a little while, quietly. And they've been watching Saylor's every move, and they've been reading Bitcoin Magazine. And so when they heard us announced this, they got really excited. The company was JetKing. You may have heard of them by now. They told us that the announcement actually provided cover for them. It was one of those things where seeing two big companies like Strategy and BTC Inc. come together sort of signaled that the movement was here to stay. It's kind of like that. I don't know if you've seen the Derek Sievers TED Talk, where it's one person dancing and then a bunch join. It's kind of like that. That's kind of the dynamic, right? It was Saylor out there dancing by himself for a while. A few people had to come and join. And it takes several to make it an actual movement, which I think is where we're at right now. So that phrase kind of stuck with me, that we were providing cover. They also shared that the launch of BFC was actually a major factor in them moving forward with telling the world about their Bitcoin strategy and that they were going to go all in. Obviously, there were other factors involved in their decision, but this was pretty inspiring to hear. It made me feel like maybe we're onto something with this network. So a few months later, Bitcoin MENA in Abu Dhabi, their CTO and co-founder Sid Barwani announced that JetKing would become the first public company in India to adopt a Bitcoin standard. And today, Sid is here. He's speaking a little bit later, and JetKing is off to the races. So one of my favorite stories, it just shows these signs of acceleration, that things are getting faster. In fact, their story is one of many indicators that we're reaching a tipping point. We've been in this sort of gradually phase for a while now, and we know that suddenly is right around the corner. And there are hundreds of companies like JetKing. Some of them you've heard of, some of them you have not yet heard of, but leaders from all over the world who aspire to be the Michael Saylor of their region or build the strategy of their industry. Corporate adoption has become the main character of this cycle. By the way, if you were waiting for something tweetable to say that was it, that was the one. Corporate adoption is the main character of this cycle. And it's not just strategy making headlines anymore, right? It's sometimes 3 or 4 different companies making announcements of a buy or funding rounds or making some required disclosure, right? These SEC filings have never been more exciting to read. You've seen the numbers, and the numbers are quite staggering. In Q1 of 2025 alone, public companies bought 95,000 Bitcoin when only 40,000 were mined. So the math is starting not to math. There's only 21 million. The we're so early days are coming to a close. So if your company is not already evaluating a Bitcoin strategy, it's time. This is really like not a drill. Simply running the numbers will show you that our sense of urgency here needs to increase. According to Bitcoin Magazine Pro, the 50 companies with 100 plus BTC now hold 3.41% of the total supply. So if you've been waiting for a sign, this is it. Go now. I give you permission. You can get up right now and leave. Go, whatever you need to do. Make a phone call. Fire a board member that's blocking you. I've been having some really interesting conversations with people who have these different blockers. And so, as Saylor even mentioned earlier, this does require courage. It requires boldness and leadership. And so if you're in that position, this is definitely a call to action. And we're here at Bitcoin for Corporations to help you get off zero. We also work with the companies to help amplify their brand and optimize their treasury strategy. We offer intentional engagement. We combine education, strategic partnerships, and brand amplifications through our media company. We are a trusted Bitcoin-only ecosystem powered by BTC Inc. and Strategy. And we don't just work with companies who already have a Bitcoin strategy. We also nudge the ones who don't yet. We're proactively reaching out to a lot of these companies, sometimes dropping threads like these, analyzing what their portfolio looks like and who would benefit from Bitcoin adoption. And even if they don't respond, they can't say that we didn't warn them when it's too late, maybe. And one of the threads that we did was on GameStop. And I have no evidence that Ryan Cohen saw our post about GameStop. But 6 weeks later, they did announce that they were going to adopt a corporate Bitcoin strategy. And Ryan Cohen does follow Bitcoin Magazine on Twitter. So just saying, did I lose my monitor here? Oh, and we are back. So yeah, I don't know if that had anything to do with it, but I think we all know the real reason that GameStop made their move was when Saylor met with Ryan Cohen. But accelerating corporate Bitcoin adoption isn't just a catchy mission statement, although it is pretty catchy. I do like saying it. Things are actually already accelerating. We're simply doubling down and joining the work that's already happening. To give you another example, in March, I attended Metaplanet's AGM in Tokyo and experienced firsthand just how quickly things are accelerating. There were 1,500 Metaplanet fans packed into the Grand Hyatt on a Monday, and it was standing room only. I'm looking around like, shouldn't you guys be at work? I don't know what's going on. Why are there so many people here? And so all 1,500 of these people packed into the room just to attend a shareholder meeting, again, on a Monday. So Simon Gerovich and his team did not disappoint. They delivered by far the most exciting board meeting I've ever attended. There were lines of people wrapped around the room just waiting to take a photo with Dylan LeClaire. In Japan, Simon and Dylan have basically become rock stars. But a personal highlight for me at this event was the debut of Bitcoin Magazine Japan's first print issue. It became a collector's item overnight. Like, good luck getting a copy of this. I saw David Bailey himself actually get turned away at the swag table, which was pretty funny because he's the CEO. But I think he was just kind of standing in that line to take a photo with Dylan for too long, and they were all gone by the time he got to the swag table. So I think he ended up getting one in the end, so it's all good. The most striking moment, though, at this at the AGM was at breakfast the next day. So I was wearing my Metaplanet hat, bright orange, couldn't miss me. A guy approached me, obviously, from the meeting, and he started sharing his story. And he told me that he discovered Bitcoin because of Metaplanet, which I was kind of struck by. I'm like, shouldn't it be the other way around? Because until I heard his story, I hadn't really given much thought to how many people are actually discovering Bitcoin because they first discovered a Bitcoin treasury company. So these are just more signs of acceleration. Bitcoiners talk a lot about orange pilling individuals, but we rarely talk about how companies are orange pilling entire communities at once. Their conviction, the corporate conviction, creates secondhand curiosity from their shareholders, and they start looking into, okay, why is this working so well? What is kind of going on? Public companies are becoming force multipliers for Bitcoin adoption, which I think is an unexpected benefit of what's happening. Metaplanet obviously is a standout example. It's been fun working with Simon and Dylan, Yoshimi and team to support their journey as best we can. Their execution has been world-class. They are phenomenal at what they do. Metaplanet's also my favorite example of an ideal roadmap for any corporation looking to follow in their footsteps. So they first came in to the BTC Inc. ecosystem through an investment by UTXO. Then they were one of the first companies to enroll as members in Bitcoin for Corporations. From there, they acquired the Japan license for Bitcoin Magazine, launching Bitcoin Magazine in Japan. And now we're exploring further possibility of a conference in Tokyo. And that's not official yet, so don't leak that. Don't tweet about that. I'm not sure if I'm supposed to share it, but hopefully it's happening. And that would definitely be exciting. So Metaplanet so far 3 for 3 in the ecosystem, looking for the sweep, and we will see what happens next. Bitcoin for Corporations is here to empower the next Metaplanet and the next Jet King, maybe even the next strategy. We are a Bitcoin native membership network. We help public companies and pre-IPO companies design and execute Bitcoin strategies for their balance sheets, brand positioning, and capital markets differentiation. We are a Bitcoin-specific business coalition, giving companies frameworks, access, visibility, and the community that they need to courageously lead during this next phase of Bitcoin's evolution. And a lot has happened since we launched in Nashville last year. Prior to this role, I was the managing director at Bitcoin Magazine, and Bitcoin for Corporations was just one of the products that we offered as part of the media business. But as it's grown, as the momentum has picked up and the potential has become more obvious, we actually decided to spin it out to its very own BTC Inc. business line, which I now lead. We're dedicating more resources. We're continuing to expand the network around the globe. And we are committed to investing in this movement for the long term with this move. Right now, we're a nimble team. We're still very much in startup mode. We're hiring and scaling fast to meet the demand. We collaborate closely with Ed and Shirish from the strategy team. They've been a huge support. And we are better positioned than ever to capitalize on the momentum and continue building an incredible community. I believe that Bitcoin for Corporations will become the largest corporate network in Bitcoin. We will be the industry standard and trusted resource for all things corporate Bitcoin adoption, education, preferred vendors, analytics, you name it. BFC is just getting started. The leaders of this movement, some of them are already here, some are in this room, and a lot of them are already part of the network. So enrolling as a BFC member means getting early adopter rates right now because it's still early. They run 25K to 100K per year. But as value accrues to the network, these prices are going to go up. But membership does have real perks. Some are expected, some are kind of baked in, and some are spontaneous. This is a very dynamic industry. Crypto Ball in DC or Investor Day in Paris, we got you. We are your corporate Bitcoin concierge. So on deck, we also have the BFC Symposium at B25 in Las Vegas. Hope to see you all there. This is going to take place on Industry Day, which is the 27th. The kickoff party, Bitcoin Classic, and UTXO's Investor Day all happen the day before on May 26th. So I hope you can join us for those as well. And I'm also excited to share that we're launching a brand new BFC podcast with Pierre Richard. So keep an eye out for that in the coming weeks. And then, I didn't get this slide in here, but one last update is that Fold is the latest Bitcoin treasury company to join the network as an executive member. So big shout out to Will Reeves and the Fold team. One of my favorite companies in the space, coming out of nowhere with a Bitcoin treasury strategy as soon as they went public. BTC Inc. runs the world's largest Bitcoin conference, the world's oldest media company, and a top 5 performing hedge fund. Strategy is the world's largest corporate holder of Bitcoin and is on its way to becoming the most valuable company on planet Earth. Together through BFC, we're creating value for the companies in our network and the Bitcoin ecosystem at large. We're amplifying bold leaders. We're normalizing a new corporate playbook. As crazy as this movement looks to a lot of people, collectively, by coming together, we're demonstrating that if you don't have a Bitcoin strategy, actually, you are, in fact, the crazy one. So let me close with this. If your company is considering a Bitcoin strategy, if you're already in the game, if you're creating products, services, if you're allocating capital to the space, we would love to talk to you. You can find us on Twitter. You can visit the website. Tell your friends, come shake our hands. Myself and the others from the team are all here, and we would love to meet you. So thanks for being here, and thank you for listening. Cheers.
Make sure to check out that book. It is fantastic. I'm not your bruh. All right, I am pleased to introduce now Eric Semler, chairman of Semler Scientific. This is a company specializing in innovative diagnostic tools for chronic diseases. And he'll be discussing the journey of strategic Bitcoin adoption as a primary treasury reserve asset and why other companies should do the same. Eric?
Thank you. Thanks, Natalie. Natalie has a very cool book coming out in the fall that everyone needs to read called Bitcoin for Everyone. So very exciting stuff. where are my slides? Okay, great. I've never done this before, so this is fun. First, I want to say thank you to the strategy team, to Michael Saylor and Fong for this incredible event. Such a great opportunity to be here, and so much better than being here than at the Milken conference with the TradFi crowd. Semler Scientific is the second US public company to adopt the Bitcoin Treasury standard, and we're now the fourth largest Bitcoin Treasury company in the United States. Our roots are in the medical business. My father was a cardiologist in Oregon, started the company in 2007. He was not only a cardiologist, but a very inventive person who invented a number of different devices to monitor and screen for cardiovascular diseases. I was an early investor, seed investor in the company back in 2007, and have been just passive investors until about 2 years ago. My father is no longer involved. It was just something that I wanted to help my dad get started, and then ironically, I'm deeply involved now. Here's a bit of a snapshot of our company. Can't really see it very well, but we IPO'd about 10 years ago. We have a market cap of around 400 million. We have 100 million of convertible debt. We're actually the most levered public equity in Bitcoin Treasury, which is good if you think Bitcoin's going up. We have about $350 million now of Bitcoin, and our volatility is about 3 times that of the S&P. So some of you may not know this, but we were kind of an earlier version of MicroStrategy. Our stock went up 13,500% between 2016 and 2021. We were actually, I think, one of the best performing stocks in the world. We reached $1.2 billion market cap. And that was driven by our product, QuantaFlo, which we still have, which is a device used for early screening of a disease called peripheral artery disease, and PAD. And PAD is a serious silent killer. Half the people that have PAD don't know they have it, and so they need to be tested early for it. If they do have PAD, they have 3 times the higher chance of having a stroke or a heart attack or amputation or death. So it's really important to do that. And our product has saved hundreds of thousands of lives, and it became a darling of the Medicare Advantage companies. They drove our growth, and we had very high margins. And we were kind of like a forever stock. You would never sell our stock. It went up every day. And then in 2021, it hit a wall. And we were kind of the victims of a political attack on the Medicare Advantage industry, led by Elizabeth Warren, who's kind of attacked us on 2 fronts now. Our stock was affected, our company was affected by the pressure on the Medicare Advantage space. And it sent us down into what I call the zombie zone, using Michael's zombie analogy. We were a zombie. And we fit the criteria. I define zombie in those 5 bullet points. We had terrible stock performance. We had a very low valuation. Almost 40% of our market cap was in cash. We were generating a lot of cash. Our growth had slowed, but we remained very profitable. And so as this was happening 2 years ago, I decided to take notice. A little bit about me. I started my career out as a journalist. I worked for the New York Times, and then I got a JD and MBA from Harvard, and decided to go into finance. Eventually started my own hedge fund, but I focused on technology and media. And I tended to be a contrarian investor. We were the only ones who gave Netflix money to go into streaming. There were no other institutions on Wall Street that believed they would be successful in streaming. So we gave them $150 million for that. And we were one of their largest institutional shareholders. So that was my fund, TCS Capital. We were about $4 billion under management. And one of the other things that I had success doing was being an activist. I really view it like being a reluctivist. I reluctantly got active in companies that weren't performing. I guess earlier versions of zombies. it was just a matter of being kind of stuck in these stocks for years and not making any money and wanting to do something about it, and usually just finally just getting so frustrated that, I went to the board and said, look, you got to change the board, you got to put me on the board, we got to do something to drive shareholder value. And so, ironically, that's what I did with my namesake company. My dad wasn't involved, it was much easier to do. And so I went to the board, and this 2 years ago, and I said, I'd like 2 board seats, and I brought in another board member who owned a lot of stock, and we'd like to change the direction of the company. And so our board, that happened. I was able to pull that off. And we ended up with a board that had a lot of skin in the game. We 30% or more, I think, of our board's ownership. Our board owned over 30% of the stock, and so it was a much different story. We were all about maximizing shareholder value now, and that was something that was kind of a pet peeve of mine, because most boards, as many of you know, don't really. They're filled with retired folks who are just collecting a check and are going through the motions and not really driven to maximize shareholder value. So now we had this company in a position to do that. We thought the answer would be doing acquisitions. We had $60 million of cash. We figured we'd buy something in the medical space. We probably looked at 100 acquisitions over a year and couldn't find anything compelling, and it was frustrating. And so at that point, I was an investor in MicroStrategy. I was kind of a contrarian investor throughout my career, and I saw what Michael was doing. I was really obviously benefiting from it and impressed by it, and realized that we looked a lot like MicroStrategy did in August of 2020. We had a very similar profile. And it was amazing to me that no one had actually tried to copy Michael, or at least follow in his footsteps, and that really surprised me. So I guess you could say I just wanted to be like Mike, and I said I gotta get in touch with this guy, and I didn't know him, so I called my friend Tom Lee, and Tom Lee knew Michael, and he put me in touch with Michael, and there aren't that many. Not everyone's going to pick up the phone when a zombie calls, but Michael did. And he rolled out the red carpet, couldn't have been more generous with his time and advice and encouragement. And he helped me to educate our board that, fortunately embraced this idea of becoming a Bitcoin treasury company. And so a little less than a year ago, we became the second US public company to do this. We are married to this thesis that Bitcoin is digital gold, and therefore buying it at these levels makes a ton of sense. And now we're the 4th largest Bitcoin treasury company in the US, the 9th largest US corporate holder of Bitcoin. Our Bitcoin holdings are growing rapidly over the last few weeks. And like I said earlier, we're the most levered Bitcoin treasury equity. So Bitcoin goes up, we stand to benefit exponentially. And our performance since we started has been good. We've outperformed the market by a lot. We've outperformed Bitcoin. And that's with intense headwinds in our healthcare business, which are now reversing, and things are starting to look up for us on the healthcare side, which is great because that's just organic cash flow that helps us buy Bitcoin. So we think we're really just getting started. These are our Bitcoin holdings, hold over $350 million of Bitcoin. This is how we have been doing it. We've done it with our cash flow, with convertible bonds, which are long-term in duration, 5 years, and with ATM. We also have a lot of firepower left. We have almost $500 million of Bitcoin left on our authorization. We've done it intelligently and accretively, as you can see from our high BTC yield and BTC gain. So for some of you who are thinking about considering a Bitcoin treasury strategy, thought I might give some tips for what to expect, both positive and negative, some of the unexpected. For us, I'd say the biggest gut punch was we announced the strategy. We buy $60 million of Bitcoin, We're so proud of ourselves. And like the next morning, there's a headline that there's going to be a distribution finally of all the Mt. Gox victims in Bitcoin, and Bitcoin went down like 20 to 25% pretty rapidly after that. And I know this happened to MicroStrategy too the first time they bought Bitcoin. Not maybe as much, but I learned that last night. The Mt. Gox experience, the slide in Bitcoin, made us look really stupid, I think, on the outside, but inside we were thrilled. I mean, this was a great opportunity to buy it lower, but you're gonna face that conviction test. This is more personal to me. I hate social media, so you gotta be ready for the impact of social media and how important it is for a Bitcoin treasury company. I'm somebody who spent 25 years of my investment career avoiding the press, and now I crave it, which is weird. My kids think I'm a joke on social media, so that's a little bit hard to get over. But it's, you got to learn to be good at the soundbite, which is difficult, but I'm getting used to it. That's the Heisman Trophy. I think of that as a stop sign or a stiff arm. We got stiff armed by the SEC. You're going to run into red tape, issues with the SEC, not so now. We had a lot of trouble getting our ATM approved, a lot of runaround. You may have issues in your operating business that hold you back from buying Bitcoin. So there's going to be blackout periods and periods where you wish you could be in there. You can't really time it as much as you wish. These are the positive surprises. This is the best surprise. This guy's the Bill Belichick of Bitcoin coaches. He is the GOAT, great mentor. He keeps you straight on the straight and narrow, keeps you laser focused. He's so generous with his time and advice. And he's a trailblazer, and we're so fortunate to have him on our team. His courage, his vision, his conviction, has turned traditional finance upside down. And it's hard for me to explain to my friends who are still traditional finance folks, but it's amazing what he's done. And had he not been successful, and had he not been such a great mentor to me, I think we would definitely still be in the zombie zone. And I think of him as this, we're Simon and me and Dylan, Mike, we're in this bicycling race together. We're on the same Peloton team. We're riding behind him. He's setting the pace. He braves the elements. He shields us from the air pressure and the headwinds and allows us to conserve energy, stay back, and fuel up in Bitcoin. I think we'll never catch up with him, but he's definitely pushing us. These are some of the other positive surprises. So we were a zombie, and now we're reawakened. Our whole organization is reawakened. Bitcoin has kind of electrified our stock, our employees, our shareholders, and it's a great feeling. Volatility is vitality, and it's just been an exhilarating experience. Other positives, this is a little crowded, this screen, but you just get immense feedback, so much feedback, constant feedback from your shareholder base, which completely turns over. It goes from being healthcare focused to Bitcoin focused, and some of it's critical, some of it's cheerleading, but it's great to have that, and it's also very inspiring and invigorating. That is not Michael Saylor and Fong Lee on the Oregon Trail. That's Lewis and Clark, and my roots are in Oregon, and I think there's this emotionally and financially rewarding feeling about being part of a pioneering expedition, being early in a mega trend. It's incredibly rewarding. Obviously, all the financing opportunities that Michael has created for us and others, and for himself, for his company, are also very, very positive and hold huge potential. And a lot of people ask me what's next, and I think it's a simple answer. The future is orange. Thanks.
To see all the zombie zone success stories, right? Semler improving public health while embracing sound money. There's going to be many more to come. All right, let's get right into the next speaker. I'd like to introduce Salman Khan. He is the CFO of Mara Holdings, and he will be discussing the company's strategic shift to a full Bitcoin HODL strategy and becoming the second largest corporate holder of Bitcoin in the world. Please welcome Salman.
Good afternoon. I'm going to start by asking a few questions. How many of the people in attendance today drive a car? How many have a car that they drive? Almost vast majority of us. How many of us have driven a twin turbocharged engine? Few of them, wow, some enthusiasts. And you would recognize once you drive that and you go back to the base model, no matter what brand it is, you feel the difference. So today I'm going to talk about our twin turbo strategy, as I would call it for Mara. Mara is the largest Bitcoin miner in the world today as a public company. We are not only the largest Bitcoin miner, we also hold the second largest Bitcoin as we know today. So with that, I will first bore you with things that you already know. Some of the things that you have been listening since the morning as to why Bitcoin. As you can see in the last 15 years, 11 years out of those 15 years have been positive for Bitcoin. Bitcoin has been the largest or the best returning asset class amongst any other asset classes that we know. It's data won't lie, right? I come from traditional background, traditional finance background, and I was one of those skeptics asking these questions. What is Bitcoin? Why Bitcoin? But when you start learning about it, when you look at the data, data won't lie. Whether it's gold, whether it's NASDAQ, whether it's S&P 500, whether it's small cap, micro cap, large cap, you name it. High yield bonds, doesn't matter. So a unique asset class. Why is it unique? Primarily because it's portable. It's secure. It's much more secure than any other thing out there. It's free from any intervention from several sovereigns. And that's the key distinction between fiat and Bitcoin. Now, again, I'm preaching to the choir. People in attendance today here have heard this many, many times. But bear with me for a few seconds. What we've seen is, over a period of time, the adoption of Bitcoin. And initially, it was the hobbyists and people who could see the long-term vision of Bitcoin, understanding where it's heading towards. Then came the retail that brought the valuation up. And then we saw institutions coming in. And as we are seeing now, it's beyond institutions, it's the sovereigns. The sovereigns are coming in and taking positions on Bitcoin. And we expect this adoption to continue from here on. And as I had said in the beginning, I am one of those traditional minds who were skeptic about it. And people like Michael Saylor and Fred Thiel orange-pilled me in terms of Bitcoin strategy on your balance sheet as treasury. Finance managers and executives have to pay attention to this. You're missing out on a once-in-a-lifetime opportunity that may not present itself again. Learn about it. Listen to it. Seek the knowledge yourself, and you'll get there. Now, in terms of going back to Mara, where does Mara fit into this twin turbo strategy and Bitcoin? What is Salman talking about? We're the largest Bitcoin miner worldwide. We have 1.7 gigawatt capacity worldwide. That's a lot of electrons that we consume to create something called Bitcoin. Our revenues are entirely exposed to Bitcoin today because we are proudly mining Bitcoin worldwide. So we operate in 4 different continents. We have 16 data centers worldwide, and we have large scale to small scale, all sorts of sites. We not only do that, but also we are very creative. We are looking at mining Bitcoin through stranded energy. No matter what happens to Bitcoin price in future or global hash rate, we want to be able to continue to mine irrespective of what the energy cost is going to be. So our goal is to be energy efficient, operating cost efficient, and capital efficient. And that keeps the Bitcoin network alive. Does anybody know who was the first miner in the world? Any guess? Satoshi, thank you. Satoshi was the first miner. We continue his legacy by being the largest miner and keeping the Bitcoin network secure and alive and continuing to keep the value of Bitcoin as it is today and continue to grow from here. So Mara has the second largest holding position in Bitcoin, as we call it, the HODL. 48,000 coins. As of today's price, that's more than $4.5 billion in fiat terms, if you like the dollar terms. And it's continuing to grow. How did we get there? Just a few years ago, just if you pick up 3 years ago, Mara was a very different company. Our previous CEO and management team decided to raise capital and invest that capital into mining capacity, or computers, as it's called, ASIC miners. And we deployed that as a company in rented hosted space and data centers. And we started growing very, very quickly. As you can see the trajectory over this period of time, we've deployed a lot of compute. Now what happened is once we achieved that compute or the power, we realized that we could go beyond that. We're not going to stop here from a scale perspective. We want to squeeze more out of the system. And for our stockholders, what we did was we shifted, or we pivoted towards more asset-owned and heavy asset strategy and a combination of asset-light and asset-heavy. So we started the year last year with just 0% owned and operated capacity. And we exited the year with more than 70% owned and operated capacity. And that's a huge pivot. What that allowed us to do was reduce our operating costs significantly, up to the point that last year we were one of the lowest electricity cost per coin operator versus others in this space. That is important because there's something called halving that keeps happening in this industry. And we have to be sustainable. And our goal is not to stop there, but to continue to reduce our operating costs so that we can continue to mine Bitcoin irrespective of what the pricing does. So those sites that we acquired, we did not stop there either. We further went out and started acquiring electron generation. So what that means is that we are in now partially generation business. Now, we're not a utility company, but we like assets where we can generate electricity. So two case studies for us. One is that we bought more than 100 megawatt wind farm in Texas. Now, some of you who are from Texas, you would know that when the wind blows, there's a lot of electricity that is generated at the same time. And then it's distributed through the ISOs or the grid. The grid can get locked as a result of so much electricity being generated. What we did was we acquired this site. We reduced that congestion at the grid by taking these electrons away from the grid. And we put our modular or decentralized, or not decentralized, but compute on the edge, as we would call them. 20 to 40 foot containers, we drop them on the site, on the dirt, and we put ASIC computers and put our state-of-the-art technology of cooling technology, and we start hashing Bitcoin. Now, we did the same thing not only there, but also we partnered with an oil and natural gas company and spent 2 decades in the oil industry. It's a pain for that industry where you have this flare gas, natural gas being flared in the atmosphere. And that's an environmental impact and things like that. So what we did was we started taking that flared gas and converted that to electricity, and now we drop these energy or compute on the edge and start computing and hashing Bitcoin. So some creative ways of doing this, reducing our operating costs significantly. That means that we can have a low-cost strategy and not worry about price of electricity, price of Bitcoin, or the hash price, as it's called, which is a combination of Bitcoin price and the global hash rate. On top of that, we have cooling technology that we have built ourselves. We are very proud of that. There's a lot of excitement around that. We're deploying that two-phase immersion technology in our own operated sites this year, in addition to 2 outside customers. We're gathering data, and we expect that to significantly reduce our operating costs further as well. So all in all, cost reduction has been a primary focus for us. But if I have to reflect back on the hodl that we have, the 48,000 coins, last year we did, just like some of my other colleagues who were here a few moments ago and will be here later today, we did converts. We did 0% converts, more than $2 billion last year, approximately $2 billion for zero, and then we did some more than 0% as well. And we primarily went out and bought Bitcoin from it. And as you can see, we have a twin turbo strategy, as I started with. We can either mine Bitcoin and hold it on our balance sheet with full hodl strategy, because we don't sell any of that Bitcoin, or we go out and buy Bitcoin from the outside world in the market, just like others are doing, by raising capital from outside that is accretive to our stockholders. So that has worked out very well for us. Last year, we bought 22,000 coins, for example, from the open market, while we produced 9,500 Bitcoin ourselves. And we continue to do that. And as a reference point, if we were to buy all this Bitcoin or produce all this Bitcoin that we hold today, it will take us many years until 2036 at this capacity to accumulate that amount of Bitcoin. Same way, the amount of Bitcoin that we acquired, it will take us 4 years to accumulate that as part of mining operations. So it's a capital allocation question. Where does it make more sense? Does it make sense to buy Bitcoin today, or does it make sense to mine Bitcoin? So that's a question that we ask ourselves almost on a daily basis. And that's where the twin turbo strategy for Mara has worked out very well. Our stockholders love that we hold Bitcoin. Our stockholders love when we grow our hash rate. And we are a proud Bitcoin miner who continue to expand worldwide responsibly, and we operate in communities. We give back to the communities. Our communities love us for that. And that twin turbo approach has worked out very well. I want to finish this conversation on a point that you guys may have already heard others talk about. If Apple, Amazon, Microsoft, or any of those big tech companies or companies that have ample amount of cash reserves on their balance sheet, if they had invested just 1%, 3%, or 5% of their cash reserves into Bitcoin, very small portion, over the last 3, 4, 5 years, they would have seen an IRR on their BTC investments between 30 to 90% or so. And that's unheard of kind of rate of returns. You don't see these kind of rate of returns, whether you're a hedge fund, whether you're a private equity, whether you are investing in your own business. You don't see these kind of rate of returns, which is fascinating. So I'm going to end here with a question for all of you who are considering buying Bitcoin, who are managers, on board members of your companies, where you have treasury assets and you're investing in US treasuries where you don't get much return. What is stopping you from this supercharged strategy? Please think about that. Make the best use of your resources and invest in the right strategy. Thank you very much.
Salman, and I don't know if Fred Thiel is here, but a huge thank you to him for being such a supporter of women in Bitcoin. We're going to have our biggest brunch yet, 500 women at BTC Vegas, so I hope to see some of you there. All right, next, All right, next up, I'm happy to introduce Michael Moe. He is the CEO of KULR Technology Group, a leading supplier of cooling technologies to the space industry, and fun fact, they are on the Mars rover. He will discuss their bold Bitcoin treasury strategy, allocating up to 90% of surplus cash into Bitcoin. Welcome, Michael.
All right. Good afternoon. My name is Michael Moe. I'm the CEO and co-founder of KULR Technology Group. It's truly an honor to be here today. Honestly, when I got the invitation to speak, I was very excited, but also equally nervous, because there are a few things I can say about Bitcoin that has not been better said by Michael Saylor. So I will take my best shot at this. Let's see. So I appreciate your patience with me for the next 15 minutes as I share the history of KULR, what we do, how we get into the Bitcoin treasury strategy, how our journey has been so far, and what's ahead of us. We come from a 30-year heritage of developing space-proven technologies about thermal heat management, battery safety technology, and also vibration mitigation technology for NASA and our DoD customers. Our solution has been on the Space Shuttle program, Mercury Messenger, hypersonic vehicles, International Space Station, the Mars rover Perseverance. Yes, it's on the red planet right now. And also we're working with NASA on the Artemis mission. Our goal is to commercialize these technologies for mass market applications, such as energy storage, electric mobility, and computer data centers. We've been on the New York Stock Exchange, American Exchange, since 2021 under ticker KULR. I'll go into more details about two of our product lines, our KULR One battery platform and the exoskeleton AI product. Our KULR One battery is a modular battery platform that's built to meet the NASA safety and quality standards. Serves several multiple markets. The KULR One Guardian is to serve our Army customer. KULR One Air for electric air mobility customers, and KULR One Max for industrial applications. The Apogee Ultra is the world's most powerful exoskeleton product, and it's in its sixth generation. The product is designed by a company called German Bionics, and KULR is the exclusive technology development and distribution partner for North American markets. It's designed to help you lift more weight with less strength on your lower back with its built-in robots. Let me tell you a little bit more about our KULR One Space. It's our space battery product that meets the NASA's crew space battery safety and quality requirements. Space battery is a growing multi-billion-dollar business thanks to the proliferation of private space explorations. It's fully designed, tested, manufactured, and certified by our team at our Webster, Texas headquarters, about 2 miles from NASA Johnson Space Center. We have recently received a $6.7 million grant from the Texas Space Commission to develop a very low temperature space battery below 60 degrees Celsius on our KULR One platform in partnership with NASA Johnson Space Center and also South 8 Technologies. So a lot of exciting development there. As you can imagine, battery cell supply chain transparency and security is critical to the success of our space and DoD customers. So we launched our blockchain secured supply chain initiative to safeguard product data to our customers. One of the initial products that will be recorded on the blockchain will include lithium-ion battery cells screened to meet the NASA Work Instruction 37 testing methodology, which is a requirement for all crew space flights. Each battery that KULR manufactures will have its metadata minted as an NFT on the blockchain. When a battery is purchased, the NFT will be transferred to the customer's on-chain wallet or moved to a burn wallet maintained by KULR to indicate ownership has been transferred. Physical AI robotics will be a multi-trillion-dollar market opportunity according to many industry giants. We believe the exoskeleton presents one of the most immediate time to market and revenue opportunity to get into this robotics and physical AI market. We produced a short video to introduce the Apogee Ultra, and let me share that with you.
KULR and German Bionic are proud to introduce the Apogee exoskeleton to North America. The Apogee is a wearable exoskeleton designed to reduce strain and prevent injuries, especially in the lower back. It learns and adapts to the user's movements, providing real-time support for lifting and repetitive tasks. The next frontier of AI will be led by systems capable of understanding and interacting with the physical world. It's a rapidly growing multi-trillion-dollar market opportunity. The Apogee has applications across healthcare, transportation, warehouse distribution, manufacturing, construction, and logistics and supply chain, and is already in use by industry leaders like IKEA, BMW, and Stuttgart Airport. As the U.S. ramps up reshoring efforts in manufacturing, supporting our workers has never been more critical. The Apogee was built to tackle modern problems head-on, reducing physical strain and preventing injuries in high-risk environments like warehouses, hospitals, and logistics centers. This strategic partnership enables KULR and German Bionic to lead the way, entering the robotics and physical AI market with a tool that will shape the future of work, elevate workforce safety, boost productivity, and protect your most valuable asset, your people.
Thank you. Yeah, thank you. Well, one of the applications is warehouse industrial use, where workers are constantly bending and lifting heavy objects. So I'll give you a fun example. One of the local Federal Reserves called us to inquire about the exoskeleton product. We responded, asked them what they're trying to lift and where it's moving to. Naturally, they won't tell us. So we did a demo with boxes of fake $100 bills and gold bars. And the demo went well, and we're still waiting for the response. But I realize it's very bad news because Bitcoin is bad for our business. I can't imagine a day when I get a call from either Michael Saylor or Fong Li there saying, hey, Michael Mo, we've just finished our $84 billion ATM. We need a couple of suits because we need to move the $84 billion of Bitcoin. But that's not going to happen. You can store and move $84 billion of Bitcoin without lifting a finger, and that's bad for our exoskeleton business. But that's okay. That's okay. Another application is healthcare, and these are nurses at the German hospital. Prior to the exoskeleton suit, the patients usually hold on to the nurse's neck, and that could be awkward and not very effective. So we built some handles on the side of the exoskeleton, and so the patients are more proactive in asking for help. They can move around and exercise, and they can recover faster, and it's better for the nurse, helping the patients move much easier. It's a win-win solution. These suits have very sophisticated machine-to-human interface through sensors throughout the suit that collects data on how workers use them and how the suits impact performance and well-being. And one of our customers, the paper cutting business, have a couple of these suits in operation and show that over a 2-hour work session, the suits are able to compensate over 10,000 pounds of weight. That's equivalent to an average elephant in just 2 hours. So in an 8-hour day, that's 4 elephants, and that's in a week, that's 20 elephants. All right, let's move on to Bitcoin, no elephants. So how we started Bitcoin, it all started last Thanksgiving. I had a wonderful dinner. I was very thankful. I had a couple glasses of wine. I was feeling very good. So naturally, I go on to ChatGPT and then ask, what's the secret of life? And it gives me this. So now I am feeling even better. I had a wonderful Thanksgiving dinner. I'm with my wonderful family. And now I know the secret of life. So I get a little more adventurous. I said, look, tell me what's the secret of money. I paid $200 for deep research. What's the secret of money? And it gives me this. So now I'm besides myself, right? So now I know the secret of life. I know the secret of money. I'm on my second bottle of a Blue Label. I'm sorry, I'm a second glass. I don't drink that much. But so I went on a 48-hour Michael Saylor YouTube marathon. I literally watch every Michael Saylor video I can get my hands on. The one that's stuck with me most is the Q3 2024 earnings call. About minute 31, Michael came on and spent about 45 minutes talking about his philosophy, execution, and the performance history of Bitcoin. I've been following Michael Saylor and strategies since the late 90s. And that was my orange pill moment. And also, Michael talked a lot about the digital energy. We're an energy management company, so the math, the physics, the philosophy behind that really stuck with me. So then I realized I'm really watching someone who has made more money for himself and his investors by outmaneuvering the capital market than Bobby Axelrod. He's 2 steps ahead of Chuck Rhodes, and Mike Prince can really hold a candle to Saylor. So I finally canceled my Showtime subscription to watch Billions and just stuck with my YouTube subscription and waiting for the new series called Trillions to come out. So how do we start? We had many board meetings, discussions, and it was a good process. And we decided to allocate up to 90% of our excess cash to buy BTC. And then we did a survey on X. As you can see, a lot of views, total about 100,000 views. We got over 1,500 votes on this. 2/3 says yes, 1/3 says no. Out of the 1/3 no, majority of them were against Bitcoin and cryptocurrency, period. So we went ahead and bought $21 million of Bitcoin and announced that the day after Christmas, so December 26. And now we have 716 Bitcoins as of today in our treasury strategy. The Bitcoin effect, first I saw the tweet from Simon at Metaplanet. Towards the end of 2024, we were the number 2 stock of the year at some point. Metaplanet was number 1, so team BTC was really beating team quantum computing. And that's before the most famous CEO in the world poured some cold water on the quantum computing concept itself. Our shareholder equity was up dramatically. We had close to negative shareholder equity at the end of 2023. We were in tens of millions of dollars shareholder equity by end of 2024. Our total asset was up 480%, 2024 versus 2023. Our trading liquidity, we went on a stretch, trade about $100 million a day. We're still trading around $10 million a day right now, and historically have been much less than $1 million a day in trading for most of 2024. What's next for us is our next goal is get to 1,000 Bitcoins. And the next best BTC effect is you get invited to fabulous New Year's Eve parties by Michael and have the privilege to speak at conferences like this. So I don't mean to be an alarmist with this title, but what I'm talking about is how BTC treasury strategy help us to prepare in a market that's increasingly dynamic, volatile, chaotic, and disruptive. I got asked a lot about how we stomach the volatility of Bitcoin. Michael Saylor said it best, volatility is vitality. So in the age of AI, where things are transforming at a crazy rate, someone may call it the DeepSeek moment, we better get used to volatility to avoid our own business to be deep-seeked. So I believe that Bitcoin treasury strategies serve 2 purposes for us. One is we believe that BTC is the best long-term store of value, beats inflation, it gains in value, and also a training ground to build a dynamic corporate culture and execution cadence that position KULR to be successful in the new era of AI. So it's super exciting. We're at the cross-section of future of money, energy, and AI. We're given the opportunity to create something fundamentally changing. It's decentralized, distributed, resilient future that will be powered by digital energy. The world has never seen a treasury product like BTC with all its characteristics. Limited supply, decentralized control, ethical protocols, fully transparent, best means of store value the world has ever seen in terms of storage and transportation costs over space and time. It's a representation of digital energy, and it's reached a scale that's too big to fail. So it's just so exciting to be able to build a corporate culture and foundation that may truly last for 100 years. This is our time, Team BTC. So thank you, Michael Saylor, for your vision, tireless execution, bring all of us together with you on this incredible journey. And thank you for giving us the platform and courage to follow your footsteps. You know, you quoted Peter Thiel, courage is in much shorter supply than genius. There are 800,000 geniuses in the world. There's only one truly lead us, all of us, at Team BTC to victory. So thank you very much for your time today. Listen to the KULR story. And I'd like to conclude by presenting you the future of money, the future of digital energy. And Michael, if you're here, please forgive me. You know I will need to take you there. So thank you.
Up next, we have Jason Wood, who founded the J. Wood Capital Advisors in 2013 as an independent capital markets advisory firm with a specific objective: to help companies evaluate capital structure and execute capital raises in a more efficient manner. Under Jason's leadership, JWCA has advised on capital structure transactions with over $185 billion in value and leads the market in crypto convertible financing advisory with over $15 billion in value for digital assets focused companies like Strategy, Mara Holdings, Iron, Core Scientific, Semler Scientific, and GameStop. He will be joining the stage with some friends and some props. So welcome, Jason.
So thank you for being here. For better or worse, I have done one thing and one thing only for 32 years, which is convertible debt. So if you want to talk about anything else, we are not the right people. We help companies raise money in the US using convertible debt. I was at JP Morgan for 20 years, rose up and ran their convert group, their equity-linked capital markets group, started this business about 12 years ago with the intention of just really being an old school advisor, helping companies think through and then execute more efficiently. I'm joined by Dave Oakes, who worked at Morgan Stanley for almost 20 years, ran their tech convert business and was my competitor and nemesis most of my life. And then Ranga Kantarai worked with me for a decade at JP Morgan. Okay, quick commercial about us. We've advised on about $185 billion of transactions. We advised on over 70% of all the tech converts in the US last year. So in this very narrow ecosystem, we're one of the largest players out there. All right, again, I'll get through this pretty quick. So we help companies with the whole thing. Like, Strategy's been a great client of ours for 6 years now or so. And the journey starts with, what's the art of the possible? What can they do? What's the pricing? What's the structure? Are there covenants? Which banks to include? What are the fees going to market? We help them with everything. And then all the stuff that doesn't get the headline work. We help them with accounting, tax, legal, all the stuff behind the scenes. One of the biggest changes in the last 5 years, and particularly in the last year plus, has been the rise of crypto-related companies doing converts. And again, we'll get into what the converts are and pricing, but this page alone, $15 billion of transactions, $10 billion just for Strategy. And some of the terms they got were just phenomenal. Okay, so what is a convert? Really briefly, it's a bond plus an equity call option. Company is borrowing money. It is debt. It goes in debt as debt in the capital structure, and they've got to pay it back at maturity. There's also an attached equity call option, which gives the investor the right to buy stock, typically at some premium, about 30 to 40% above that closing day's stock price. In return, they get a much lower coupon. As we'll show, Strategy got a coupon that was, what was it? Oh, 0, multiple times. And so that's what this is conceptually. Company borrowing money, promising to pay it back, promising to pay a de minimis amount of interest, but they are exposed to dilution on the stock if the stock goes up 30, 40% or more. Okay, so why are companies issuing converts, especially cryptocurrency? It's really simple. It's the lowest expected cost of capital across all their choices. When you think about what could they do? Well, they could issue equity. In fact, Strategy does issue equity, I think prudently, But equity is the most expensive part of the capital structure. They could do debt, but today's debt rates in high yield are over 8%, and if you have much leverage, you're pushing 10%. Well, the convert on average for crypto-related companies had a 1.6% coupon. Think about that for a sec. Fed funds is 4.5%, 5%, and these companies are getting on average a 1.6% coupon, and Strategy, again, is getting a 0% coupon. The average conversion premium is up 37%. So no dilution until the stock is up 37%. And so again, if you're a corporate treasurer thinking about, okay, how do I raise money? How do I raise money and buy Bitcoin? This has really been a very attractive tactic because, again, very low cost along the way and no dilution until the stock's up 37% on average. Converts typically come with no financial covenants and are unsecured. And again, just stepping back, one last thing I'll say is the reason this works for these type of companies is because they have huge volatility. You know, Michael has gone through in his keynote about how volatility is essentially a core asset of Strategy. That's what he's monetizing. He's really smart about monetizing his incredibly high volatility and getting paid for it in the convert market. And that's what's producing great terms for him. Okay, really quickly, why do investors, you might say, like, why would an investor ever pay zero or receive zero coupon? Well, it's a little more complicated, and I'll give you a quick sense. Most of these investors are arbitrage funds. They buy the convert, they short stock. They are not taking a negative view, they just want a hedged position. The amount of stock they sell up front is roughly the probability that the stock is above the conversion price at maturity. So they sell some stock up front. Well, next day stock goes up. Their model says stock is up, higher probability of conversion. So sell some more stock. Next day the stock goes down. The model says probability of conversion went down, so buy some stock. So think that through. If the stock is moving and they're buying low, selling high, buying low, selling high, they're capturing that volatility. They're making money on that volatility. And so that's what they do, and this is where it's not a zero-sum game, where Strategy can get a great deal in the convert market, but the investors get screwed. As long as their stock is volatile, the investor does well too. So this was the last convert we did for Strategy in February of this year, $2 billion in size. The reference price that day, the stock price that day was a little over $321. Zero coupon, 35% conversion premium. And so the conversion price was $433.43. 5-year maturity, company can call it after 3 years, but there is a potential put in year 3 as well. Okay? This is really a slide we spend the most time with our company clients. It summarizes why a company does a convert. It is the lowest expected cost of capital. So what we're looking at here is stock price on the x-axis, cost of capital on the y-axis. That's an annual IRR. The blue line is just equity. It's common stock. Stock goes up, it's more expensive. Stock goes down, it isn't. High yield is the flat line. That's the high yield index right now, which is about 8.25%. And the convert right around zero, so zero, until the stock is up 35% or so. And then the line kinks up because the investor has upside from that point. And so the question we always get is, okay, what's the break even versus straight debt? In other words, how much does a stock have to go up before it'll be more dilutive to shareholders? And in this case, it's a 15% CAGR. So of course it could go up 15%, but on average, company stock prices go up about 10%. And so that's why I always say it's the lowest expected cost of capital. Converts the investors I mentioned, most of these investors are ARB funds. They buy the convert, they short stock, and they trade the volatility. Most of these are listed here: AQR, Aristeas, Susquehanna is a big one. Every now and then we'll get some outright long-only investors who don't hedge and are just playing for the appreciation, particularly Voya and some of those. Okay, this is really key. We get asked all the time, who can issue a convert? Well, number one, you gotta be a US public company, okay? So that's who our investors are looking for. That's our business. You've got to be a US public company, and the market cap really needs to be 500 million or more. We've done converts under 500 million, but it gets harder. But 500 million and more, and the average is more like 2 to 3 billion market cap. Also has to be stock borrow. So there has to be lenders out there willing to lend their shares, because again, they convert ARB investors. They buy the convert, they short stock. That's a key part of their strategy. The key to creating the best pricing is the volatility. So companies that have great vol can get great convert pricing. Okay, so a couple last slides, and then I'm happy to open it up to Q&A. So back even when the start of Strategy's journey into the convert world to buy Bitcoin, from 2020 to 2023, crypto represented 2% of the convert market, and Strategy was 1% of that, was half of that. The last year plus, year and a quarter, it was 27%. I mean, think about that for a second. This is an industry that's been around for a while, and yet 27%, and it was a big year last year. A lot of tech issuance, a lot of software companies coming to market. 27% was crypto related, and 13% was Strategy. So I've got to give a highlight reel here at the end to Strategy. They've done something that I've been doing this 32 years. I've never seen anything like this. So they've issued $11 billion of converts in 8 different tranches, and their average coupon, this includes when they first began and they had a much higher coupon, 0.64%. They had 3 zero coupons more recently in the last 6 months. So they did $6 billion of zero coupon, which is 2 times more than any other convert issuer over the decade. And then the one they did in November, $3 billion zero coupon, was the best convert we've seen in the best priced convert in the last decade. So that's all we had. We have 3 minutes and 15 seconds. So if anyone has questions, happy to entertain them. Please.
Wait for the mic. Non-strategy convertibles, you have the put feature. Are you also issuing resets?
So, okay, good question. It used to be, before Strategy, we just did 5-year convertibles with the company's ability to call it after 3 years. Importantly, the investor could not put it back to the company. Well, Strategy is always trying to get the best terms they can and monetize their volatility. By adding that put in year 3, it dropped the coupon again back to 0, even though rates had got up a lot in the last few years. So adding that put creates financial uncertainty. They have to be, if their stock is down in year 3, the investors are gonna put it back and they're gonna have to refinance. But the benefit they get is the coupon was order of magnitude 1% lower than it otherwise would have been. And so if your question was, is that needed or do other people do that? The answer is mixed. And interestingly, some crypto companies did, but we also, and I don't mean to pat ourselves in the back, but that put structure was Ranga's idea. And then we showed it to our other clients. And there's a great company in Phoenix called Microchip. And they have nothing to do with crypto. And they saw what Strategy did. and they did it as well in order to drive down the cost of financing. Sure.
Just a question. The overall convertible bond market as a percentage of traditional, say, bond market is still very tiny, like lower single digit. With the success of some amazing deals strategy has done, do you expect that market pie to expand in the next 5 years?
Okay, so good question. The convert market is tiny in comparison to the overall credit markets. It's order of magnitude 1/10 of the high yield market. Do I expect it to expand? I've been hoping for 32 years that would happen. So what I would say is, this is the time it typically happens. And what I mean by that is, in the last 3 weeks, interest rates are up about 1%. Okay, out the curve, they're out more like 1.5%. The convert coupons haven't really changed though, because while interest rates have gone up, volatility has gone up, and so net, the convert terms have stayed the same. I say that because the real reason most companies, especially tech companies, do converts is the difference between where they can do straight debt and where they can do a convert. If that difference is only 2 or 3%, like at times it was in 2020 during COVID, I said to my clients, you should just do straight debt. That savings you get from issuing a convert, it's not worth it. Now, that difference is 6 to 7%. I mean, for strategy, they could borrow in the high yield market at probably like 8.5%, give or take, or get a 0 coupon. And so when that happens, we get more people coming from high yield in particular into our market, and we're seeing that. We've got 8 deals coming, and a couple of them are transitioning out of high yield, at least temporarily, to take advantage of these rates.
Strike, it behaves like a liquid convertible bond. Are the buyers of Strike using market neutral strategies and monetizing volatility? And are they the same as the original convertible bond issuers?
That's a tough one. One of you guys should take that.
I can take it. Go. You want me to go? So Strike, they're slightly different. So those are more income dedicated funds because the coupon's much higher. It's like 8.25, 8.5, I should say, and it was issued at a discount. So that's more insurance money, pension money, kind of long-only investors that are piling into both Strike and Strife, compared to the convertible bonds, which I'd say is primarily more hedge fund or the arbitrage community that are looking to play the volatility and have a shorter duration to get the money back from a credit perspective.
Retail also.
And retail as well.
I think we're getting the yank.
Yeah.
Happy, if anyone has questions, happy to get in the back.
Thank you, guys.
Thank you.
Another corporate Bitcoin success story, Metaplanet. I'm excited to introduce Simon Gerovich. He is the CEO. He has a very interesting backstory. His father was a diplomat and he got to live all over the world, but he actually lost his initial Bitcoin on Mt. Gox. And if you're familiar with Metaplanet, it is Japan's first publicly traded Bitcoin treasury company. After pivoting away from hotel development and operations, Simon led Metaplanet's adoption of Bitcoin as its core treasury reserve asset, making it the top performing listed equity in the world in 2024. And they are excited to welcome everyone to the Bitcoin Hotel in early 2026 in Tokyo, Japan. Welcome, Simon.
Good afternoon, everyone. I'm Simon Gerovich, president of Metaplanet. It's an honor and privilege to be here today. A year ago, we were a small, publicly listed company on the Tokyo Stock Exchange, struggling to survive. Today, we've transformed into Asia's leading Bitcoin treasury company and the top-performing listed equity in 2024. I'm excited today to share with you the story of our transformation. I graduated from Harvard with a degree in applied mathematics. I started my career as an equity derivatives trader at Goldman Sachs in Tokyo, a background that has proven to be quite useful today. In hindsight, I probably left a bit too early, but I wanted to pursue an entrepreneurial route. So I left Goldman, moved to Thailand, and started a budget hotel company. We grew that to 30 properties across Thailand, Philippines, Indonesia, and Japan. In Japan, we realized that it was very important to be a listed company, to get funding from banks and get investments from investors. And so we ended up acquiring a majority stake in a public company. The move unlocked financing for us, but most importantly, gave us the public company that would soon become Metaplanet. March 2020 delivered the ultimate left tail shock. Travel collapsed, hotel rooms went empty overnight, and revenue vanished. In many of our markets, our hotels were forcibly closed. We didn't get support from the government, and our lenders were less than friendly. As an entrepreneur, revenue being down 100% was not a scenario that I'd considered in my wildest dreams. We tried our best to stay afloat. We restructured, renegotiated with lenders, and sought emergency financing from shareholders and investors. With much difficulty, we managed to survive. We weren't stronger yet, but we were awake, ready to search for something indestructible. I first discovered Bitcoin in Japan back during the Mt. Gox days and held a modest position that I watched rise, fall, and rise again. It wasn't until the depths of COVID, with time on my hands, that I first listened to a series of podcasts by Michael Saylor. Bitcoin answered two questions that nearly destroyed us in 2020. What happens if your cash flow disappears? And what if a dollar is really not worth that if the money printer continues? That's when I realized we needed an indestructible asset. No counterparty risk, no jurisdictional risk, no debasement risk, no political risk, no earnings risk, and no pandemic risk. What surprised me was that although Michael had laid out a playbook for listed companies all around the world to follow, no one had the courage yet to implement it. Now, in April 2024, our board of directors convened an extraordinary meeting of shareholders and voted unanimously to amend the articles of incorporation of the company to make Bitcoin front and center of our corporate treasury strategy. From that point onwards, Bitcoin would become our primary reserve asset and unit of account. And going forward, all capital decisions, whether equity, debt, strategic investments, excess liquidity, would all be evaluated on a Bitcoin base. 30 days later, we published what we now call the Bitcoin Manifesto, which we published to the Tokyo Stock Exchange system, and laid out a very clear path going forward. We would utilize all the capital market tools available to acquire Bitcoin. We also adopted BTC Yield as our core KPI, as our ultimate measure of success, an immutable scorecard by which management, directors, and stakeholders can measure success of the strategy. With courage and conviction, we made the leap, and our shareholders were ready to follow the journey to see what was possible. 1 year later, we executed the pivot, and the market responded. We now have 5,000 Bitcoin. Metaplanet is the #1 performing stock in the world in 2024, and our market cap has grown over 100x in less than a year. Bitcoin didn't just save our company, it completely redefined what was possible as well as the trajectory. When we began the pivot, we had just over 10,000 shareholders. Today, that number has grown to almost 64,000 shareholders. We didn't realize this at the outset, but Metaplanet has become the most tax-efficient way for Japanese retail to get exposure to Bitcoin. By buying directly, that incurs up to 55% capital gains tax. And that is versus buying in a retirement account where it's tax-free. Our goal is to become the most held stock in Japan. The current record is held by Toyota, which has about 900,000 shareholders, and I'm confident that we can get to 1 million shareholders over the next few years. Now let me take you to the left side of this slide, our old world as hotel developers. It could take over a year to find the right site, another year for design and permitting, 2 more years for construction, and several more to reach stabilized performance. From start to finish, the whole process can take 5 to 10 years. And in that time, cash flows were held hostage to interest rates, construction costs, tourism cycles, and even health scares. Anything that could go wrong often did. Now look at the right. This is what it looks like operating on a Bitcoin standard. We can raise capital today, convert it to Bitcoin tomorrow, and announce a rebased balance sheet the following day. Bitcoin per share accretion doesn't take years. It happens immediately. What once took a decade to deliver returns now happens in 24 hours. Volatility, once a threat, has now become the catalyst that fuels new capital formation. And that's why we chose to pivot from cranes and concrete to code and cryptography. Metaplanet trades at 140% realized volatility, about 5 times the Nikkei 225. That might scare most company executives, but for us, volatility is fuel. We've engineered a financial system that turns volatility into capital, capital into Bitcoin, and as our Bitcoin holdings grow, they feed back into volatility, round after round after round. Japan doesn't have the same flexible capital markets as you do in the US, and there's no ATM equity offering available to Japanese companies. But we've built something even better. In January this year, we launched the largest moving strike warrant program in Asian capital markets history. And thanks to our volatility, it was priced at a 0% discount to the previous day's close, while other companies are raising capital at an 8 to 10% discount. So how have we done so far? We've raised $500 million in equity capital, all of which has been allocated to Bitcoin accumulation, which makes us the #1 equity issuer in Japan in 2025 across 4,000 listed companies. We've only just begun, and this is where we begin to accelerate. Now, these are our 3 core KPIs, and I imagine for many of you in this room, already quite familiar, and they're critical, not just for us, but for every Bitcoin treasury company. Now, BTC yield shows effectively a company how quickly they're increasing their Bitcoin per share. BTC gain measures the net increase in the company's total holdings, accounting for dilution. And BTC dollar gain reflects the dollar value of the BTC gain. And together, these metrics allow us to quantify how effectively we're executing our Bitcoin strategy and give our shareholders a transparent, Bitcoin native way to track value accretion. Now, our guidance for 2025 is a BTC yield of 35% per quarter. In Q1, we achieved 95%, so we're 3 times that target already. And as a result, our BTC yield year to date is 121%, which means that we've more than doubled our Bitcoin per share so far this year. Now, every financing decision we make is based on a single question. Does it increase Bitcoin per share? If the answer is no, we don't move forward. Now, so far, we've executed 3 major capital increases, a rights issue last summer, our first moving strike warrant transaction in December, and now a second, larger moving strike warrant program that's underway. Now, this chart shows the results. After each raise, Bitcoin per share has increased. And in total, we've grown it 13x since Q2 of last year. That's the standard that we hold ourselves accountable to, every transaction, every round measured in Bitcoin terms. Now, Bitcoin per share tells the story of precision. This tells the story of scale. Bitcoin didn't just change our capital structure, it transformed the entire company. What you're looking at here is the growth of our market cap alongside the value of our Bitcoin treasury. In April 2024, our market cap was a tiny fraction of where it is today. Now, our Bitcoin holdings alone are worth almost $500 million, more than 30 times our market cap when we began. That's the exponential outcome of executing on a Bitcoin standard. Now, this is a chart of our historical MNAV. The skeptic would say that we're overvalued because we are trading at a premium to our Bitcoin holdings. But that loses sight of how quickly we're growing our Bitcoin per share and our NAV. Last time our MNAV was at these levels was last November. And since then, our stock price has doubled, and our NAV is up 5 times. Meanwhile, our BTC yield is compounding at a staggering 28% per month over the past 12 months. Most companies compound earnings slowly over years. We're compounding Bitcoin monthly in a way that's measurable, scalable, and transparent to every shareholder. Now, it's still early days, and traditional finance doesn't yet have the right tools to properly value Bitcoin treasury companies. Too many are focused on multiple to NAV and overlook the value that's being created under the hood. Now, so far this year, we've added over 2,200 Bitcoin to our balance sheet through disciplined treasury operations. That translates to $213 million year to date. On an annualized basis, that would be $640 million, which is effectively profit, though it doesn't show up in a traditional P&L. Call it what you like, accretive BTC, unrealized return, or even a tax-free dividend to shareholders reinvested onto the balance sheet. At current prices, we're trading at the equivalent of just 2.3 times earnings based on BTC gain, and yet the market still struggles to recognize what's actually being built here. I believe that Metaplanet and the entire category of Bitcoin treasury companies is undervalued. And I believe there's a real opportunity for analysts and allocators to rethink how value is measured in a Bitcoin-denominated world. Metaplanet is Japan's only publicly listed, regulated vehicle dedicated exclusively to Bitcoin. We serve as a secure, accessible entry point for domestic investors seeking exposure to the Bitcoin economy. Our platform combines capital markets with institutional discipline, aligned with the world's most recognized open source brand. Looking ahead, we see education as a critical part of accelerating adoption. Through our license for Bitcoin Magazine Japan, we aim to onboard 1 million people into Bitcoin in Japan. And not just into Bitcoin ownership, but into long-term understanding. And through the Bitcoin Hotel, located in central Tokyo, we're creating a physical hub for the community, a space for education, events, and real-world connection. We believe education, transparency, and accessibility are the key to building a durable on-ramp for the next generation. Now, this is our market cap over the last 20 years. For nearly 2 decades, it barely moved. Can you guess when we adopted the Bitcoin standard? In just 12 months, we've gone from near zero to over 1.4 billion in market cap. It's a reminder of what courage and conviction can do, and we owe that to our shareholders who believed in the pivot and backed us every step of the way. We also owe a generous dose of gratitude to Michael Saylor and Strategy for showing us the way. Now, I'd like to end by showing you a photo from exactly 1 year ago, our shareholder meeting on the day we adopted the Bitcoin standard. The room might look sparse to you, but for us, it was the best attended meeting we've had in a decade. Just 20 shareholders. But what followed was one of the most incredible shareholder meetings I've ever experienced. Thank you. This was our shareholder meeting just 6 weeks ago. Over 1,500 people attended, standing room only in the back, and an overflow room filled to the brim. A room full of Bitcoiners, shareholders, and supporters, all eager to learn, contribute, and be part of something bigger. You could feel the hope in the room, a collective desire for change, for something bigger. From 20 people last year to this, that's the Bitcoin effect. And this is just the beginning. Thank you.
All right, I just learned that I am a Bitcoin sub-kuch. Does anyone know what that means? I'm a Bitcoin maxi in Hindi. Learned something new. All right. Next up is Sid Barwani. He is the CFO of Jet King Infotrain, a leading Indian IT training institute. He will discuss their pioneering move as India's first public company to adopt Bitcoin as a treasury reserve asset, inspiring other Indian businesses to explore Bitcoin and do the same. Welcome, Sid.
Hi, good evening. My name is Siddharth Bharwani. I am CFO and JMD of Jet King Infotrain Limited. I have a lot of uphill tasks. We are possibly the smallest Bitcoin treasury company in the list of Bitcoin for corporations. But it's exciting. Indian market is super exciting, and we are really looking forward to scale this up. Today, we are at just about 15 odd Bitcoin. and we are a 10 million odd market cap company, but the idea is to catch up to the guys up there, right? So it's going to be an interesting journey, and I'll give you a small background around what the business was. So we started as a radio and television manufacturing company, and this is a 77-year-old brand in India. All of the work that we did in the last 77 years has been in technology, and we pivoted that business into radio manufacturing, television manufacturing, and eventually IT and IMS. We got to COVID, and COVID was one of the most difficult times for the business to understand where do we go from here. And we saw the only way we can sustain is possibly to have our education operations going. We had the operations on, and today we have a revenue stream from direct student fees, franchise royalties, and one-time franchise fees is what we cater to. So when we hit COVID, we were at about 200 centers across India. And what we saw was there's no chance that we can build this business back. And if we had an option to build it back, what would we do? We saw a list of about 15 odd different businesses or ideas or acquisitions that we can possibly look at. And we asked ourselves one question, right? And the question was, what is the one thing we do that will make everything else redundant or unnecessary in our entire lifespan of the business, so to speak? And what we said was, the answer was, of course, to build a Bitcoin-centric company. And how did we think about building a Bitcoin-centric company? It was in 3 formats. It was to build a BTC model, which was to do with treasury, education, and adoption. If we keep focusing on these 3 models, the long-term story for Bitcoin and JetKing is our roadmap. So India is a tricky market, right? We are currently with, if dollar and inflation around the dollar and the money printing problem around here is so high, India is worse. In 1986, for example, the dollar to INR to dollar ratio was about 12, and today it's sitting at 86, so it's up about 7 times. What we realized was we cannot keep sustaining INR in our balance sheet. There is no chance we can look at INR and keep going on with our business. And if we compared INR to BTC, it was just going down to pretty much 0. And when we convert the BTC appreciation towards INR, we see there's a drastic shift back into making sure that we hold all our currency in Bitcoin. So we said, let's sit down and let's possibly adopt a Bitcoin treasury strategy. What we did was reached out to the best legal team, and Bitcoin was kind of illegal in India at that stage. This was March 2022. It was kind of illegal in India. And what we saw was, first we need to get the regulations clear. First we need to make sure that there is no regulatory problems around this. We went ahead and hired the best people who got the ban uplifted from the entire Bitcoin vicinity, so to speak. We built some best practices internally. Michael Saylor's entire presentation was one of the most crucial pivots for us, where we realized that this is a way to go. Sorry. We moved from there. We created this entire documentation around how we should take our stakeholders to possibly adopt Bitcoin. Bunch of very key stakeholders here was SEBI, Bombay Stock Exchange, and Ministry of Finance. They literally, when we had conversations with them, were asking us, where is your Bitcoin? Where is Bitcoin? We would like to see it. We would like to touch it. We would like to feel it. And there was no chance we could show them. So we had to explain them from the scratch, literally how Bitcoin worked, how we had to possibly look at custody, and how the whole 9 yards. It's not as mature as the market here or in Japan or anywhere else in the world. So we did some workshops with them. We spent copious amounts of time just explaining how Bitcoin works, how the entire asset class works. Taking a 77-year-old business, a legacy business, which was largely to do with education, and pivoting that to become relative to one of the most riskiest asset, which was considered the most riskiest asset towards Bitcoin, was making that switch that we are now a Bitcoin-centric company. We adopted this, so we spent some time with the Bitcoin team, Bitcoin INC team in October of last year. When we saw the playbook was successfully executed by Saylor, what we decided was this is it. This is what we want to kind of do. We invested in 2022, Bitcoin and Ethereum. I got out of the meeting, called my brothers, and said, I think we should just pivot into a 100% Bitcoin company. We sold all the Ethereum at that stage. We had some stable coins. We sold everything. And we went and bought all of it. We went and bought Bitcoin from all of it. We announced this strategy in Bitcoin Abu Dhabi last in December. And since then, the stock appreciation is, XIR is 224%. India creates a very big tax arbitrage, similar to what it is in Japan. When your Bitcoin directly is taxed at about 55% in Japan. In India, it's 30%, and your equity is 12.5%. So the idea was to also get people to trust Bitcoin via a regulated stock, which is JetKing. India happens to have one of the most deepest derivative markets, and what are the type of options that we can possibly do is unknown to us at this stage because it's a very new market. We are just in the first stage of our preference issue. We will create this pref issue, which is already, it's already done pretty much. And the next stage is to possibly issue equity shares. And once we reach a certain level and certain threshold, we will end up creating different instruments that are possible to create in the Indian regulation market. Here's a small roadmap that we have in terms of what we are looking to do, which is connecting it back to our Bitcoin treasury and education and adoption strategy. In the next 6 months, we're looking to raise and scale to about 180 Bitcoin. In the next year, we'll be touching about 1,800 Bitcoin, and ultimately before the next halving, around 2030, whatever instruments are at our disposal, we will touch about 18,000 Bitcoin. We still have about 60 odd classrooms and centers across India. We'll be establishing Bitcoin learning ecosystems where people can understand about Bitcoin mining, Bitcoin cold wallets, Bitcoin, everything to do with Bitcoin in terms of how they can possibly build on top of Bitcoin, as well as possibly become whatever else you can build on top of Bitcoin is what we'll be creating. The third part is adoption, and we are partnering up with a lot of people to educate them about Bitcoin. And in this case, this is just an example of partnering up with a Bitcoin-owning cashback company and exposing them into our ecosystem and getting them to understand more about stacking sats. I guess there is a lot of let's say, development that has to happen in India because the market is super hyper-regulated in terms of equity and what are the instruments that you can use. And so far, it has been a more of an educative journey. And eventually, I do believe that once this market opens up, the opportunity here will be as big as possibly US and Japan. Thank you so much.
Thanks so much, Sid. It's crazy to think that India has a population of 1.4 billion people, and there are only 21 million Bitcoin. So hopefully a lot of demand coming in. Next up, we have Alexander Lazay. He is the CEO of the Blockchain Group, Europe's first Bitcoin treasury company focused on increasing Bitcoin per share over time. Previously, Alexander was digital assets lead at Accenture, where he advised more than 30 financial institutions on their digital asset strategy to accelerate Bitcoin capital markets adoption. And one of his missions is to see Bitcoin in the Eiffel Tower. At least that's what he tells me. Welcome, Alexander.
Thank you, everyone. Thank you, Strategy, for leading the Bitcoin movement. And thank you for Bitcoin for Corporations for leading the Bitcoin adoption of corporations around the world. I'm Alexandre Lézé, Deputy CEO and Director of Bitcoin Strategy at the Blockchain Group, Europe's first Bitcoin treasury company, listed on Euronext Growth Paris under ALTBG. So we are today in a context where the largest financial institutions and governments are adopting Bitcoin. Bitcoin is the best performing asset over the last 15 years. Bitcoin has seen the rise of the most successful ETF of all ETF in history, and Bitcoin is the only asset that the US government does not want to sell and plans to accumulate. And so in this context, as you all know, the only thing better than Bitcoin is more Bitcoin. And Bitcoin treasury companies can provide more Bitcoin by focusing on Bitcoin per share increase over time. We have strategy for America and the world, plus 3,000% over the last 5 years, while Bitcoin is up 1,000% over the same period. We have Metaplanet for Asia and the world, up 1,000 to 2,000% over 1 year, while Bitcoin is up 50%. And we now have for Europe, the Blockchain Group, already up 700% over 6 months, while Bitcoin is up by 30%. And the playbook is extremely simple. It is to raise capital, to accumulate Bitcoin in a way that increase Bitcoin per share, to hold Bitcoin forever, to never lose the Bitcoin, and to not sell the Bitcoin. And so by focusing on maximizing BTC yield, the increase of Bitcoin per share, Bitcoin treasury companies can achieve more Bitcoin. And TBG is focused on increasing Bitcoin per share. Year to date, we have increased Bitcoin per share by 709%. What this means is that at the beginning of the year, shareholders had 41 sats per share, and today they have 332 sats per share. And that's been shown in the performance of the stock, obviously, 474%, that was last week, and yesterday it was 700%. So I need to keep updating the slides. And so more Bitcoin is achieved by increasing BTC yield for shareholders. But this outperformance of Bitcoin is not magic. As outlined by leading French asset manager Tobam in Bitcoin, they published a mathematical paper demonstrating how Bitcoin treasury companies can outperform Bitcoin based on 3 factors. First one is BTC yield that I mentioned, the increase of Bitcoin per share, per fully diluted share over time. The second one is the BTC performance with the exposure to Bitcoin on the balance sheet, of course. And the third one is the BTC premium, the premium between the market cap and the net asset value of the Bitcoin. Most traditional investors typically look only at factor 2 and factor 3, but they don't take into account factor 1, which is extremely important because it increases the net asset value of the company over time, taking into account the dilution. And so the conclusion of the mathematical paper of Tobam, led by Yves Chefati, the founder and president, is that BTC companies can outperform Bitcoin with unchanged premiums. And that's something to understand for investors that consider Bitcoin treasury companies. The outperformance is not only about the premium, it is also about the BTC yield that is generated by those companies. So how did we generate this 709% BTC yield? Well, we increased the shares, the fully diluted shares, by 2x year to date, while we increase at the same time the number of Bitcoin on the balance sheet by 15x. And so that's how we deliver the 709% BTC yield. TBG has also adopted the key BTC KPIs invented by Strategy, the BTC yield, BTC gain, and BTC euro gain. And TBG has generated more than 200 BTC gain year to date. For comparison, in euros, that's 23 million euros, which is already more than our sales of last year for the operational business, and which is 17x the net result of the company for the whole year, but in 1 semester on a Bitcoin basis. And so that shows you the impact and the transformative impact of Bitcoin for any publicly listed company. What are our key milestones for the Bitcoin Treasury Company strategy? We launched the strategy back in November 5, 2024, and we directly started with a 1 million raise at 70% premium to the reference stock price, increasing our holdings to 15 Bitcoin. Then we doubled down with the entry of globally renowned investor, Adam Back, the only person mentioned in the white paper that I used to know when I was working as digital assets lead at Accenture, and a few other investors, which led to a raise at a 40% premium to the stock reference price and led to our BTC holdings to grow to 40 Bitcoin. Then we decided to accelerate the Bitcoin Treasury Company strategy as it was planned since the beginning, and to get the authorization of the general meeting to raise up to 300 million euros. And just 1 month after this, we were able to raise 50 million in BTC-denominated convertible debt, which was a world first for Bitcoin treasury companies. That means that the convertible debt was directly subscribed in Bitcoin. So we directly received Bitcoin, and the debt is also denominated in Bitcoin, which means that our assets and debt are both denominated in Bitcoin, and we have no credit risk on the operation. That is this operation that was massive for us in terms of scaling the model, and that allowed us to raise to this 700% BTC yield. We then launched a share subscription program for all shareholders to participate in the BTC accumulation strategy of the company. And over this period of 6 months, we went from 0.15 euros for the stock to 0.85 euros of the performance. And that was last week. Today is about 1.15. So the goal is to accumulate as much Bitcoin as possible, as fast as possible, in the most accretive way possible for shareholders. And we also have operating business with eOrga, Metadev 3, and Triman that are focused on tailor-made web applications and data intelligence and AI consulting, with also a branch of blockchain-based development that we intend to adapt for the Bitcoin ecosystem. This has been possible thanks to a Bitcoin-focused and lean leadership team composed of Jean-François Descaves, an ex-president of an asset manager, Ludovic Chechin-Laurent, the co-founder also of Capital Union Bank, the largest bank in the Bahamas, Jean-Philippe Casadepac-Soulet, the CEO of the company and founder of one of the operating business, and myself, a Bitcoin maximalist focused on implementing the strategy playbook at European scale. We have strategic investors, Fulgur Ventures, one of the biggest, if not the biggest, VC Bitcoin fund, Adam Back, that I already mentioned, UTXO Management, the investment branch of Bitcoin Magazine, and Tobam, the French 2 billion asset manager, among others. So we are honored to have them, and before going into more of the Bitcoin Treasury Company strategy, I wanted to give you a picture of the operations of the historical activity. Well, we are focused on tailor-made digital applications with full-stack development and blockchain-based applications, and harnessing data and AI for transformation, for enhanced business intelligence. And so we believe that over time there will be synergies between AI, data analytics, and business intelligence related to Bitcoin. And now TBG is at a turning point of its history. After having many different lives for the last decade and even 2 decades, and a major restructuring, that was our need-to-know basis back in December 2023, when the group had financial difficulties and liquidated and sold all of the subsidiaries that were not profitable to have a group with 2 operating companies that have profitability, and launch on this basis and strong basis a Bitcoin Treasury Company on November 5, 2024. And so in 6 months after this return to profitability of the group, I joined the company in November for implementing the strategy. And since then, we are the #1 BTC company in Europe, focused on Bitcoin per share increase over time. We are the #1 stock performance in France out of all stocks traded in Paris. And we generated this 709% BTC yield year to date. But we are just getting started. To date, we have mobilized equity in private placement. We have mobilized Bitcoin convertible bonds. We have mobilized share subscription warrants. And we have been authorized to proceed to public offerings and fiat convertible bonds. And so what you can see is that our business model, our core business model now, is really to use the elasticity of capital markets financial instruments to acquire as fast as possible the most inelastic asset on earth, which is Bitcoin, in a way that maximizes BTC yield. And that is my whole focus. Every day I'm 121% focused on maximizing BTC yield for our shareholders. And so if you look at the performance more closely, because if you look at the last 6 months, we are outperforming the market. But if you look closely and compare with strategy, Metaplanet, 1 month, 3 months, 6 months, what you realize is that we are exactly following the steps of strategy and Metaplanet since the launch of the respective Bitcoin treasury company strategies. The range for the 6 months is literally from 400% to 700%, and that is exactly the performance we have obtained from yesterday. That was 700%, and between 400% 2 weeks ago and 1 week ago, and 400% and 700% as of yesterday. And so the takeaway is that Bitcoin treasury companies are the fastest growing companies, and if you are bullish on Bitcoin, you can look at Bitcoin treasury companies as the best risk-adjusted way to outperform Bitcoin. And if you are bullish on Bitcoin treasury companies, you might want to have a look at early-stage Bitcoin treasury companies. We have bold plans for the future. We are focused on acquiring as much Bitcoin as possible, and we ambition to acquire 1% of the total BTC supply over 8 years. That means a potential of 21 to 42K BTC over the next 4 years, and about 210K BTC over the next 8 years. If Bitcoin reaches levels of 1 to 2 million euros or dollars by the next 8 to 10 years, that would mean that the potential BTC net asset value valuation of TBG could reach about 210 to 420 billion euros, which would mean that it would be potentially the opportunity for TBG to become Europe's largest publicly traded corporation. Thank you very much all.
All right, who is ready for the strategy after party? I think you can do better than that, right? I want you guys to give the warmest welcome to our next speaker, because he's ready, more ready than all of us for the strategy after party. Patrick Lowry. He is the CEO of Samara Asset Group, a deep tech-powered alternative asset manager with a hyper-focus on alpha-generating strategies and Bitcoin. They leverage their robust balance sheet to seed emerging asset managers and back the world's best builders in Bitcoin. Welcome, Patrick. Last speaker.
All right, well, good evening, everybody. And believe me when I say I know you all probably want this to be made quick to get to the happy hour so you don't have to listen to me talk anymore. Yeah, exactly like Natalie said, I'm right there with you. I'm ready to get going to the happy hour myself. So, my name is Patrick Lowry. I am the CEO of Samara Asset Group. Samara is a publicly traded global holding company based out of Europe. We have, actually since 2018, the company's inception, had Bitcoin as our primary treasury reserve asset on our balance sheet. And what we aim to do is democratize and decentralize opportunities for investors to get exposure to some of the most innovative and emerging technology around various asset classes. And largely we do this not because we're a Bitcoin treasury company, like you've heard a lot of my colleagues talk about what their strategies are today, but rather we are a company that has an operable business model investing in funds and investing in managers that merely leverages Bitcoin as its primary treasury reserve asset. And I think there is a unique distinction here, because even though we did raise 21 million in a Bitcoin bond at the end of last year, the first ever to be done so in Europe, again, leveraging Michael Saylor's playbook, our core business model is not just buying and stacking Bitcoin for the sake of stacking Bitcoin, but acquiring Bitcoin to use to deploy to the funds that we have on our platform. And the reason we do this is because, frankly, up until Bitcoin, the number one asset class that has performed in the modern economy, it's not been equities, it's not been the S&P 500. And while Bitcoin has turned this on its head for the last 15 years or so, ever since Bitcoin's conception, the number one asset class from a pure ROI perspective has been venture, hedge, and private equity funds. Now the problem is, most investors cannot access this asset class. And why is that? Well, it's because of qualified and accredited investor laws. So for instance, in most jurisdictions, especially in the West, your government effectively either tells you you're too stupid to understand the risk you're taking on by investing in venture or hedge funds, or frankly, they're telling you you're too poor to potentially suffer the loss of investing in venture and hedge funds. And I fundamentally disagree with that, because I'm a Bitcoiner. So this is why our core business model is investing in funds. And on the Samara Asset Group balance sheet, we have exposure to over 20 venture, hedge, and private equity funds, which gives us indirect exposure to over 700 portfolio companies. This makes up about 60 to 65% of our balance sheet, whereas the 540 Bitcoin that we sit on makes up roughly about 20 to 25% of our balance sheet, depending on wherever Bitcoin happens to be that day. And this is where our business model is unique relative to my counterparts, because while I love the concept of BTC yield, and I think it's wonderful to see these groups out there acquiring more Bitcoin per share for their balance sheet, I don't necessarily just believe in sitting on Bitcoin for the sake of sitting on Bitcoin. The reason for that is, I think Bitcoin not as an investment, but I think of Bitcoin as money. And if I'm the CEO of a publicly traded company, if I'm just sitting on Bitcoin, if I'm being honest, that's actually money that I believe I should be distributing back to the shareholders. Because what do you do if you're the CEO of a company that cannot exceed the weighted average cost of capital for the operations of that company? And what I mean by weighted average cost of capital is the hurdle rate the internal CEO has to exceed to actually make a return on investment for their shareholders. Well, if the internal rate of return that you have to actually exceed is Bitcoin, that means, well, you should be distributing that Bitcoin back to your shareholders, because I personally and fundamentally believe the best way to hold Bitcoin and get direct exposure to Bitcoin is not investing just in companies that have exposure to Bitcoin, but by having it in a hardware cold storage wallet and running your own node to validate any transaction you have. So if you want pure exposure to Bitcoin, avoid Bitcoin companies. But if you want companies that have come up with creative and unique ways to raise capital to acquire more Bitcoin, such as you've heard a lot of my colleagues talk about, there's significant value in that. And if you also want to look at companies that leverage Bitcoin from an operable perspective, leveraging it as their primary treasury reserve asset to deploy to the businesses that they're either investing in or are building, I highly encourage you to look at these companies as well. And this is where the Samara business model is unique. But why is that the case? Well, because whenever we subscribe to a venture capital fund or a private equity fund, let's just hypothetically say I commit $5 million from our balance sheet to a manager that I believe will outperform Bitcoin over the life of the tenor of that fund. Well, I don't invest that $5 million on day one. I can't. The capital is called over the investment period of the fund. And usually this is a 3 to 5 year investment period. Sometimes it can be up to 7 years. And this is done through what's called a capital call, where the manager will let me know over the course of many months when I need to give them the money that I committed to their fund so they can finance the investments that they discover over the life of that fund. Well, that means I need to keep back that $5 million in cash, and maybe $1 million is invested on day one, who knows. But that means there's $4 million that I need to make sure that I have access to over a 3-5 year period to be able to fulfill the commitment I made to that manager. Well, I don't want to keep that money in dollars. The dollar's worthless, and it's going to be zero in the very near future. I also don't want to use treasury bills. Because all I'm doing with treasury bills is trying to exceed the yield, or rather, use yield from treasury bills or something like that to cover the cost of inflation. Because my dollars are going to go down in value over a period of time. But there's a wonderful money out there. There's the world's most perfect form of money out there called Bitcoin that over a 3 to 5 year period continues to appreciate in purchasing power. So whenever I commit to that fund, that $5 million, okay, maybe $1 million is invested on day one, but my treasury then becomes in Bitcoin. And that Bitcoin continues to appreciate in purchasing power over the investment period life of that fund, such that the $4 million that I might have to distribute to that fund over time, I might only liquidate a small portion of Bitcoin relative to what that Bitcoin is worth today, because we know what happens to Bitcoin every 3 to 5 years. You have the halving effect on Bitcoin's price relative to fiat currency. You have continued mainstream adoption. You have continued institutional adoption. So I effectively, in pure Bitcoin terms, am investing in substantially more funds on behalf of my shareholders by having all of my treasury reserve assets in Bitcoin. And I know that this works because just yesterday, Samara, we published for the very first time the world's first Bitcoin CPI, the world's first Bitcoin Consumer Price Index. Because frankly, I've always felt that looking at Bitcoin in dollar terms and considering Bitcoin's success as a currency because it's appreciated in value relative to fiat dollars, it's very low IQ thinking. I think of Bitcoin not as an investment, I think of Bitcoin as money. And I think of Bitcoin as the world's most perfect money, which is why we created this BTC CPI, which prices the baskets of goods that are used for all the generic CPI issuances out of Europe as well as the United States, and definitively shows how Bitcoin, over just about any period of time, increases in purchasing power relative to baskets of goods and services, which is the exact opposite effect that the dollar has when it looks at its Bitcoin, or it looks at its goods and services, and that's obviously because the dollar is being inflated to zero, potentially on purpose by our government. But on top of using Bitcoin as our treasury reserve strategy, I don't believe in just leaving Bitcoin in a custodian account or letting it sit there and just accrue value relative to fiat. Again, Bitcoin to me is not an investment. Bitcoin is money. And money should be put to work on behalf of your shareholders. So that's why we'd use two predominant things at Samara Asset Group with the Bitcoin we have on the balance sheet. Number one, we use a portion of our Bitcoin as collateral with banking partners to extend our credit facilities. Now, of course, a lot of people don't trust companies that will do this. There's the notorious deleveraging effect that happened at 3AC and elsewhere. But frankly, these were companies that were just severely mismanaged. They were doing the bullshit grayscale trade and over-leveraged themselves, and they lost everything. But if you're familiar with risk management, if you're familiar how to manage risk of a credit facility, Bitcoin truly is the best collateral on earth. And if you manage itself well, you will never ever have to sell Bitcoin, and the additional credit that Bitcoin will offer to you with your banking partners will allow you to not only finance operations, but new investment opportunities. Secondly, we put our Bitcoin to work earning Bitcoin on Bitcoin. And the way that we do this is we set up a subsidiary underneath Samara Asset Group called Samara Alpha. Now, what Samara Alpha does is it's a hedge fund group based out of New York that has a market-neutral Bitcoin-denominated fund. Well, what does that mean? The fund being denominated in Bitcoin means that it is subscribed to in Bitcoin, it is redeemed in Bitcoin, all of its expenses, the management fees, et cetera, are incurred in Bitcoin. All of the gains the fund makes are in Bitcoin. So it is Bitcoin. Nothing is touching the dollar. Nothing is denominated in dollars. This is a Bitcoin fund capturing 100% of the beta of Bitcoin relative to fiat currency. But the market neutral element of this fund earns about 12% per year Bitcoin on Bitcoin in pure alpha while still removing market risk of the Bitcoin itself. Frankly, these are returns that would make Bernie Madoff cry, and he actually had to pretend that he was making. Now, this is where some people believe, well, I'm the Bitcoiner. I don't want to give my Bitcoin to anybody to manage and allow them to potentially steal the Bitcoin, and sure, I get that. For us, I believe in putting Bitcoin to work, and these are the two ways that we do it at Samara Asset Group. And if you're the CEO of a public company or you're a CEO of a private company thinking about Bitcoin on your balance sheet, I encourage you, while yes, consider the business models and the convertible debt issuances that a lot of the companies you've heard about today are doing. They're wonderful business models and they work, clearly. But if you're more of a traditionalist like me and wants to use Bitcoin and put it to work for the betterment of your shareholders, think about different ways and creative ways that you can use that Bitcoin on your balance sheet to drive value to your shareholders, similar to what we do. On that note, thank you everybody for listening. I think I'm about ready for a drink, and I hope you all are as well.
Thank you so much to everyone for joining us for the first day of Bitcoin for Corporations. We're going to be started right here again tomorrow at 10 a.m. So it is indeed time for the strategy after party powered by Cantor. Unfortunately, because of the weather, the location has changed. It is now going to be in the Waterside Ballroom. I hope everyone enjoys, and we will see you tomorrow. Thank you so much.